Unfortunate, but there we go. So what is up for you guys watching this on the YouTube replay? I got a few updates I want to share because I'm unfortunately gonna be gone for the next week, so I won't be streaming. And I also got a new phone, and so we're gonna be doing some analysis here on my new phone, and hopefully. I can learn how it works because it messed up a lot of my watch list. Like, for some reason, when I loaded my data onto this phone, it removed a bunch of stocks and it was just a nightmare, and it moved around a bunch of stuff. So anyway, I also want to give you a quick stock portfolio update. Hope you're having a good Sunday. I'm streaming normal than earlier because I'm leaving in a couple hours, but I still wanted to stream today. So let's go ahead and get into the stock portfolio update. Then we'll look at some stocks to buy next week because I have some interesting ones I want to share with you. So yeah, here was my portfolio on Friday. We actually are at an all-time high here in my main taxable account. We're up 19% the past year, and these are all the stocks that I own in here, and this is my total percent change on every stock in here. So luckily we are up on every holding in here. And these are all dividend growth stocks. This is my dividend growth portfolio. Then we also have my Roth IRA, which is just a retirement account. And we're up 20. We started it basically a year ago, but we're up 21%. And these are all the stocks that we got in here. So yeah, I'm trying to be more growthy in my Roth IRA, try to build up my retirement account. But yeah, let me now show you the buy and hold portfolio. This is where it starts to get a little ridiculous because if you look at our top holding, Comfort Systems, on Friday, they went up 22%. It made me some like pretty much life-changing money. I mean, this is great news. And so if we go to the portfolio year to date, on a return money weighted average, we're up 43%, pretty ridiculous. And if we go to all time, actually, it's not going to load. Or actually, it might. There we go. Let's see. Yeah, we're up 111% all time versus the S&P up 52 and the Nasdaq up 63. So the Nasdaq 100, I love them, man. QQQM is their ticker symbol. But yeah, we got a lot of growth companies in here, like an Amazon, an Amphenol, Comfort Systems, Powell Industries, and then finally we have our pure growth portfolio. This is my Webull account, and all time we're up 16% in here, so not too shabby. But still, we've definitely underperformed the market. But yeah, here are all the stocks that I own in here. Here's it by winners. You know, AMD, look at AMD, man. This stock has been crushing it. Look, it closed at a new like multi-month high. So yeah, AMD has had this nice uptrend from the April bottom, went from 80 to 160. So it's nearly doubled off the bottom. Pretty incredible, you know, off that tailwind that AMD and NVIDIA can now ship their chips to China. That's great news. And yeah, and here's some of my losers in here as well. I like being fully transparent. So yeah, what up, Mr. Champ? Yeah, hope y'all are having a good Sunday. I'm streaming normal than earlier because I'm going to be gone for the next week. So, hey, and by the way, if you missed anything and want to replay the stream, watch it from the beginning on the YouTube channel. I'm streaming on there as well. But yeah, Robinhood, dude, this has actually been my best performing stock, and I regret every share I've ever sold. So yeah, we have 5 shares of Robinhood. Guess when I bought this? I bought actually my Robinhood shares. Wait, it should show me. Yeah, right after the IPO, man. So I've been holding on to my shares for a very, very long time, but it finally paid off. You know, believe in the company, just hold it for the long run. Will you buy the Figma IPO? Probably not, because actually, let me show you why real quick. And if I was going to buy it, it would be after they IPO. And here's what you got to know if you buy before they actually IPO. So check this out. If we look right here, okay, no, thank you. Yeah, so basically you can't sell this for 30 days. Yeah, so if you look in the very middle of my screen right here, you see I'm aware of the flipping policy. Doesn't matter what brokerage you're on. If you buy before the IPO, you actually can't sell your shares for 30 days. So, well, you can, but they'll restrict your account and you can't buy any future IPOs. But that's kind of unfortunate. Like if you saw the Circle IPO was a huge success. Let me pull that up actually. Circle chart, you know, this is the stablecoin issuer for USDC. They IPO'd at 30 and now they're at 190. So I guess actually if it's been more than 30 days and you could sell it for a good profit, but some people might want to sell it quickly. But anyway, let's get looking at some stocks here. So Mr. MK Frank, actually I want to show you one stock myself. This one, I don't know what this is, but let's hope it's not a small cap. You know, we don't really like to cover the really, really small companies. You know, $160 million company. Looks like the stock's at all-time lows. Let's see. Let's see if we can figure out why. So net income, yeah, so they're losing quite a bit of net income, you know, 3 mil, 10 mil. Luckily, they have well, I don't know what happened here. So looks like the revenue's kind of gone up. It's still 13 million. Anyway, I don't like to mess around with these small caps right here, but let's see. Danny, what's up, Danny? Happy Sunday, man. He said Rolls Royce. So yeah, This is actually a aerospace and defense company. A lot of people know Rolls-Royce for the cars, but check this out right here. This is what's really interesting. Half the revenue actually comes from aerospace, and then they are in defense, then they're in power systems as well. And I want to go over Google real quick because I saw that, and I also own them. So I love Google, man. They also just reported earnings. They had very strong Google Cloud revenue growth. And well, here's my position. We're up at 19% on them. Pretty good, great Mag 7 stock. I think you should just buy and hold this one for the long run. Let me actually show you a few metrics here I think you'll like. So first off, the PE right here, the valuation is a 20. So they're trading at 20.6 times net income. The PE ratio is just the net income multiple plus any buybacks or dilution. But check this out. The Google Cloud business grew very nicely, up 32% year over year. Almost, or no, that's a new record. Yeah, all-time high on the Google Cloud. Same with the Google services. This is YouTube. This is Android. They combine so many segments in this. This is the search. But yeah. Anyway, this is what the best part is. So if we go to the net income, they made 28 billion of net income just this quarter. So 28 billion of after-tax net income. If we go to the cash flow statement, we can see if they're doing any buybacks. And check this out. If you look in the top there, they're spending literally 13, 15 billion dollars every quarter buying back their own stock. And their dividend only costs $2.5 billion. So $2.5 billion plus 13, they can easily afford those buybacks. And those are like an optional thing for them. They don't have to do those buybacks. They just choose to return money to the shareholder. So yeah, kind of got like a little head and shoulders pattern forming there, but let's go. I love Google, man. Perfect buy and hold stock, I think. Let's see here. Thoughts on Bitcoin Cash? I don't know about that one. We don't really look at crypto on here. Gene said, yeah, hey, Gene, it's actually a brokerage. It's in the link tree in my bio. It's the very first link there if you want to get this brokerage I'm on, Gene. Someone said, ooh, yeah, happy Sunday, guys. Someone said Cheesecake Factory. Hey, that's a nice place to go on Sunday, Cheesecake Factory. And look at them. I think that's an all-time high. Look at that. Cheesecake Factory stock at an all-time high. So congrats if you own them, man. So also, if you own the shares, you've also got a nice little dividend here. Yo, what up, Tommy? I like Moomoo more for the analysis and stuff. But look at the dividend right here. You get a 1.7% dividend. The payout ratio is fair at 33%. They have room to raise the dividend. What's the PE ratio? 20. So they're trading at 20 times net income. Cheesecake Factory, 72% of the revenue. Let's check out the profits here. So yeah, look at that. They're making like 30, 40, 50 million in net income a quarter. So a pretty good amount of net income. So yeah, that's what's up with Cheesecake Factory. I forgot they were even publicly traded. What's the best stock you prefer to invest in right now? It's tough buying anything because if we go to the market right now, it's pretty much at an all-time high. Because if we go to the SPY right here, check this out. Actually, we are at an all-time high. SPY closed on the S&P 500 went up every single day this week, which was just crazy to think about. So yeah, S&P had a great week. It's tough buying anything, but here's the stocks that I'm buying right now, and I'm actually down a bit on them. And this is ticker symbol PGR Progressive Corp. So you've maybe heard of that insurance company, Progressive. This is their stock publicly traded, and I just bought 2.4 shares in them. That's kind of what that blue line is right there, about 2.4 shares at $252. And let me go over here to do some analysis on them because Progressive is a really cool company, super profitable, fair valuation. Like, let me go to the PE. If you look in the middle there, the PE is a 14. So pretty fair valuation. And here's also the crazy part. If we go to where their revenue comes from, their personal insurance lines, look at this right here. I mean, it's literally just at a new record of 23% year over year. If you kind of look at it on an annual basis, it just hits a new record every year, 61 billion in revenue. And same with their next biggest line, their commercial lines. Let's see. Look at that, at a new all-time high. So that's what I love about them. And also, just simply looking at the net income right here, this is incredible. 3.2 billion. It grew 117% from the previous year. So I think Progressive is worth nibbling on here. And they just did a special dividend. So normally, look at that. They only pay you 10 cents a quarter in dividends. But look right there. They paid a $4.50 special dividend. They actually do one of these every January. So every January, you get a huge little bonus dividend. So yeah, what's up, guys? Oh, we can look at ASML. Hey, it's Aaron. Wonder if you can check Duolingo. Yeah, what up? Goop. Yeah, I got you, man. Good morning, Joas. How's it going, man? Lululemon. Yo, what up? We'll look at Lululemon too. And VTI. Yeah, let's get to all these stocks. Is that the insurance company? Yeah, Joas. That's Progressive, the insurance company. So Let's start with Duolingo. Oh, and then we got to look at ASML. There's so many stocks I want to look at. So, what's up, y'all? Hope you're having a good Sunday. We'll get to all these here. So, we'll start with Duolingo. If anyone's heard of them, it's like that language learning app. It sounds pretty boring. But here's what's incredible, and this is why I think this one is worth adding to the watch list. Look at their subscription revenue, and this is 82% of the business, so most of the business here. Look at how it just hits a new record every quarter. I mean, look in the middle, that YOY, the year-over-year growth rate, it literally grows 50% every quarter, every year. So just subscription revenues at a record. How about the advertising revenue? Look at that. Advertising revenue jumped up 38% year over year. So anyway, I love the growth of this one, the subscription growth, the advertising revenue growth, and also look at the FCF, which is free cash flow. They made 103 mil. Net income was 35 mil. They have no debt. So I actually think that one's worth putting on the watch list. Again, not financial advice here, but let's check out Lululemon and ASML. So Lululemon's kind of been struggling. If anyone's heard of like this, the clothing company. So yeah, look at that. The stock is not done too good recently. Let's look at the PE. So yeah, the PE is a 14. So that means they're trading at 14 times net income, very low. Here's their number of stores. They got 770 stores. So here's the bad news. I think it's oversold, by the way. I think investors are overselling this, but here's one of the reasons they were selling off. If you look at the revenue year over year, the revenue grew 7.3%. So revenue's up 7%. But the net income fell 2%. So what does that mean in English? It means their margins are collapsing. The margins fell 8%, which isn't great. And actually, I want to see if they're doing any buybacks, because they don't pay a dividend. Yeah, wow, look at that. They're spending 400 million, 300 million a quarter buying back their own stocks. So wow, they're actually a very shareholder-friendly company, and they can afford those too. So, all right, let's go to ASML here, and then we'll look at VTI. Yeah, I love VTI. So ASML just had insanely good earnings, but they had bad guidance. And that's what hurts stocks these days if your guidance is bad. So for the actual earnings were amazing. Look at the PE, it's a 25, versus the industry average of 26. So they're trading at a below industry average multiple right now, probably because they basically gave guidance of no growth next year. So if we look at the revenue, though, this is the great news. Yo, what up, Damar? He said, what app is this? It's actually a brokerage. It's in the link tree in my bio, first link there. If you want to get it, it's free. So anyway, the revenue grew 23% year over year. So really good revenue growth. And look at the net income, though. Net income grew 69%. So a near record amount of net income. So the margin grew to a 35% record net margin. So yeah, this quarter's earnings were fantastic, but it's the guidance that hurt them, which is unfortunate. So yeah, wait, VTI. Oh yeah, we can look at CMI too. Someone said, what up, Tommy? So yeah, VTI, this is just the total stock market. I think this company, or this ETF actually owns over 2,000 stocks, but it is market cap weighted. So look at this, their top holding is Microsoft, Nvidia, Apple. Actually, it's not market cap weighted, but it's Amazon. It's the top, companies by usually market cap. But yeah, let's see. What research do you do to decide to get into a stock? Hey, what up, Hampton? I made videos on this before. I just look for really good growing fundamentals. And here are all the stocks that I own and trust. I haven't sold any of these stocks in a long time, like Amazon. I love Amazon. So let's see here. CMI, is that okay, so this is that like car engine repair company, and they're actually doing very good. Look at that, close to an all-time high. I think they have a nice dividend too. Let's see. So dividend of a 1.93, so you get a 2% dividend yield, and the payout ratio is only at 25%. So wow, they have actually a lot of room to grow. They're already high, 2% dividend. Yeah, the PE is an 18. Oh, and yeah, I like this. We can see where the revenue comes from: distribution, engine, components, power systems. So let's check out the net income right here. So revenue fell 2%. Net income, actually, there was a little one-time adjustment there. So yeah, the operating profit was up 22% year over year. Really good. So they're making just under like $1 billion a quarter. So yeah, low PE, nice dividend, good growth. So yeah, congrats if you own that one. That one's like a nice dividend growth company. I just buy and hold that. Chancey said, yeah, hey, this app, if you want to get it, link tree in my bio there, Chancey, the very first link. It's actually a brokerage. But yeah, let's see. Yeah, Evan, I should have listened, man. GEV also has been crushing it. All the nuclear stocks have. Want to invest in a couple stocks, but this makes it a bit hard. Yeah. Yeah, it is tough to buy at all-time highs. What's your favorite dividend stocks? Here, I'll be really quick about this. But this portfolio right here, and these aren't really dividend stocks, but every stock in here pays a dividend. And most people look at me and say, "Hey, dude, Meta, Google have a 0.5% dividend." But I'm buying them for the dividend that it's going to be in 5 years. Like I'll probably have a 2 or 3% yield on cost in a couple of years. And I'm mainly buying them for the stock price appreciation. But McDonald's is a really good one. Real estate royalty company right here. Go spend $100 at any McDonald's, and $4 of that goes back to the parent company as a royalty. So, and they own a bunch of real estate. So, yo, what up, IXRN? Thanks for the rose there, man. Thank you so much. If you got a stock you want me to look at, let me know. I'll check it out. And Cam said, is ticker symbol FIX Comfort System still a good buy? I don't think so at all-time highs. It probably might go higher, but I couldn't buy this one at all-time highs right now. Should I buy before the IPO or not, and why? Yeah, I'll be quick about this again. With the Figma IPO, here's why I don't think you buy it, because if you want to buy the IPO, if you look in the very middle of my screen, it says, I'm aware of the flipping policy. If you buy the IPO, the Figma IPO, before they IPO, you can't sell the shares within 30 days or else they restrict your account. So I think it doesn't matter the brokerage you're on. So if anything, I would buy it probably after the IPO because you can't sell it. So yeah, let's see here. DLO stock and IREN. Yeah, we'll look at IREN too after we look at DLO. What is this one? D local. So yeah, stock is close to an all-time low. That's not good. So $3 billion company, but a 22 PE. So they must be profitable. So let's go down here. Yeah, look at that. They're making a nice 40, 50 mil a quarter. Revenue's up 17. Actually, the revenue's seen some nice growth. What are the margins? A 20, 15, 20% margin. That's pretty good. Free cash flow is a little choppy, but still, I mean, it's not too terrible. I think this is like it said transaction revenues. Are they like let's see what they do in paid purchase. So, so the country, okay, I didn't realize what country this was from. So look at this, hold on. That makes a lot more sense now. If we go to the market, yeah, look at this. Notice none of these are in like the US right here. So this is some like a foreign financial companies. So let's look at IREN. This is a stock I really like actually, and they're on my watch list. I think they deserve to be doing this good right now because yeah, look at that. They've been doing very good, since this bottom right here. And here's why. So if you go to the revenue down here, keep it simple. I mean, look at the revenue. It grew 166% year over year. So very good revenue. And the net income is profitable. They made net income on that. They made 25 mil, then 20 mil. And look at this fortress of a balance sheet, man. So they're growing their assets. So IREN, I do like that one actually. Any copper mines you recommend? I don't know any stocks about that, but my main copper play is ticker symbol APH right here. And it's tough to buy this one at all-time highs, but NVIDIA made this new NVLink spine product. It uses 2 miles of copper cables, and NVIDIA is ordering most of those from Amphenol Group, ticker symbol APH. And that kind of, anything NVIDIA adjacent kind of just goes up right now, so that's cool. Yo, Edzilla, what's up, man? From Arizona. That's awesome, dude. I went there once, and that's where I went to a Dutch Bros. So someone said thoughts on Chipotle. Yo, RIP Chipotle stock. I think they just fell. Like, yeah, look at that. Huge gap down on them. Went from 52 to 46. Let's go see if we can figure out what happened here. Let's go look at their earnings. So, or let's look. So, oh yeah, look. The orange line is what the analysts were expecting, and look at the blue line. They missed on revenue, missed on net income, but they did beat on EBITDA. So overall, though, for the revenue to miss, that's not good. That's like the lifeblood of the company. And the revenue only grew 3% year over year. So not great growth, only 3% revenue growth. And yikes, the net income actually fell 4%. So their margins fell as well. So I can actually get why the stock fell. They didn't grow as much as investors wanted, but still, at the end of the day, they're still printing money. I mean, 500 or 2 bill of pretty much net income and free cash flow a year. So wait, 2 billion of free cash flow. What's so they are trading expensive still. Yeah, it's okay. So yeah, they probably deserve that little fall. But yeah, if they go lower, I might check them out. So let's see here. Do you invest in any oil field companies? I actually don't right now. I'm actually really bullish on the nuclear industry. So that's why I own ticker symbol CEG, Constellation Energy. This is the largest nuclear energy play in the US, or actually in the world, largest publicly traded nuclear energy company. So Yeah, that's my energy play. Oh, Nebius. Yeah, hey, that's an NVIDIA company. So if we go to NVIDIA's portfolio right here, where is it? So yeah, NVIDIA's portfolio. Obviously they own CoreWeave, ARM, and then they own Nebius. So check this out. Let's go look at Nebius right here. There's a few things that I found really interesting about this stock. Besides the fact that NVIDIA owns it, it's the revenue growth. I mean, might be why NVIDIA is really interested. I mean, the revenue went from 11 million to 53 million. Again, it's still small numbers, but that's a really good growth rate. So from 11 to 55, if they keep up this growth rate, what's going to be this time next year? Also a really good balance sheet. I think oh wow, they're investing a bunch. Oh, that's from 2023. Anyway, and Nebius is interesting. Oh, yo, what up? IXR, yeah, we can look at Intel as well, man. I feel bad actually if you own Intel. They've been a big loser. Um, and that's because they're just burning so much money. So let's check them out. Oh, yeah, we can look at Enbridge as well. Dang, they fell 9% on Friday. All right, let's go see. I think they were saying something. Intel wants to split off part of the business or spin it off. So I don't know about all that. But yeah, here's their PC GPU market share. This might be why people like them. It's actually down 3% year over year, but 63% PC GPU market share. But here's the bad news. If you go to the net income, we go to the net income, they're kind of losing money hand over fist. I mean, they lost 3 billion the most recent quarter, nearly a billion last quarter, 16 billion that one quarter. I don't even know how that's possible. So they're burning a bunch of net income, and the free cash flow isn't good either. I mean, they're burning billions of free cash flow. So, I mean, yeah. Wait, do they still pay a dividend? They literally can't afford a dividend if they're still paying one. I think okay, yeah, they did suspend their dividend. Are they doing buybacks? You know what? We'll check if they're doing buybacks. Someone said what app is this? Yeah, hey, Josiah. This is actually a brokerage that I'm on right here. If you want to get it, it's in the link tree in my bio, very first link there. So they're not buying back their own stock, and they issued some debt or whatever. So I'd be careful with Intel, to be honest with you. It might keep on going lower. I don't know. Yo, SFG, good morning, man. Hope you're having a good Sunday, guys. Yeah, happy Sunday. So here's Enbridge. This is a really popular Canadian utility company, and a lot of people like this one for the dividend. So they are the same price as they were back in 2013. So just know that you might not really outperform the market in the long run with this kind of stock just because they're energy and utility. But here's what you do get if you buy the stock. You get a 5.7% dividend. So a very nice dividend there. And we'll switch the revenue to USD just for simplicity here. Yeah, here's where their revenue comes from. The liquid pipelines, gas distribution and storage. But check this out. Here's the net income. I mean, look at that. They're making over $1 billion in net income a quarter if you kind of average it out there. So nice. So hey Nathan, I saw you have Calm. When did you buy it and why? Because analysts are eating a huge fall from this year. So yeah, this is one of my favorite stocks. And again, with some of these companies, you don't want to have a huge position of your portfolio in them. Like as much as I love some of these stocks like PSIX and Reddit and Supermicro and SoFi, I don't want to have a huge position in them. But here's one that I really like, and the ticker symbol CALM. And where did I buy it? Here's where I bought most of my shares a while back on this dip. And I've kind of slowly been adding more. But yeah, what is Calm? What is Calm? This is the largest chicken egg producer in the U.S. So yeah, they have a 25% market share for chicken eggs in the U.S. And the bird flu and all these other various factors, inflation, pricing power, has led them to just make a ridiculous amount of net income to the point where this company is trading at 4 times net income. This company is right now trading at a 4.2 times net income. Again, they just sell a commodity. They just sell chicken eggs, but this is pretty ridiculous right here. Look at this. They made 342 million of net income just in the most recent quarter. And here's another few things. This is a debt-free stock. They have absolutely no debt at all. $500 million of cash. If you look on the left there, 499 mil of cash, no debt. Hey, they bought back 50 mil of stock this quarter, and the dividend changes every quarter based off how much they make, but the dividend only cost 169 million. And that was actually for a $3.50 dividend. Anyway, this is just a really cool company that I want exposure to. Calman is really cool. So let's go back here. Actually, I should have analyzed it over here. So yeah, Calman, I think check this out. Even though the stock is done really good, even if you buy the stock right now, look at the dividend. Still a 6.42% dividend, though beware, it does change every quarter based on how much they make. So last quarter, it was $3.50. Now it's $2.35. So still great. That's a near 2% instant return in one quarter. So let's keep going here. Yeah, I do like them, but I don't want a huge position in them. What is this app? Yeah, hey, if you want to get this app, it's actually a brokerage. It's in the link tree in my bio. It's the very first link there if you want to get it. Yeah, I love doing analysis on here. So let's keep going here. Someone said, what do you think of NuScale SMR? So this is a nuclear company, but I in it's a high momentum play. But here's why I'm choosing a different stock. So first off, this is a $15 billion company, and here's the revenue. So here's why I'm being careful. They did just get a new contract, so because look at before today, look at last year. They had 1 million of revenue, nothing. And now it's 13 million, so it's pretty decent, but still, this isn't one I would fully trust. They're still losing a bunch of net income for $15 billion market cap. I chose to go with just the largest nuclear energy play. I went with the CEG. I would even rather go with probably a VST, but still, that one has a lot of momentum in the name. But yeah, CEG is very profitable. They expect their net income, or the EPS, which is net income, to grow by double digits every single year through 2030. And that's why this one is done so good. So yeah, CEG, that's my favorite nuclear play. But SMR is not bad. It's also done fantastic. They kind of move together. Whenever CEG does good, they both do good. I have Schwab. If you change your stock to reinvest. Oh, wait, yeah, that's the dividend reinvestment program. Yeah, that's what's up, man. Um, yeah, it just whenever you receive a dividend payment, it'll just reinvest it back into shares for you. I have that turned off. I just like to manually reinvest my uh dividends. Yo, Connor, what up, man? Connor McGregor in here. No way. So he said GH stock. Let's check it out. So $5.5 billion company, and the stock has not done too good. It's the same price that it was back in 2018. So let's see what they do. I think it was a healthcare company, right? Diagnostics and research. Okay. So let's see. The revenue's up 20% year over year. And also the balance sheet is they've leveraged up their balance sheet. Look at that. Last year, they had more assets than liabilities. Now they have more liabilities than assets. The gap is kind of widening there. You kind of see that. Not great. Oh, so here's why. Here's exactly why this is happening. If you're wondering why are their assets just going down and down every quarter, well, look at this. They're losing 100 million of net income every quarter. This has to come from somewhere, so it just comes out of their assets and it goes down and down. It's not great. I don't love to see them losing all that money. So, no, Connor. Okay, hey, we'll check them out in a minute there, Connor. Try not to spam, man. Yeah, we'll get back to that one. What's up? So let's see. Randico said OSCR. So Oscar Health. Oh, we'll look at Open Door. We could look at Schwab too if you want. So here's Oscar Health. And this company has kind of been struggling because of the government regulation. Like, this is a Medicare, Medicaid business. We saw what has been happening with United Healthcare and CNC and Elevance. And but if I was going to pick one, I'd probably pick a UNH or an Oscar Health or a UNH, because this is what's crazy about Oscar Health. It's just the revenue growth. They're taking market share. Literally for the full year 2024, they had 500 mil of revenue. And for the full year 2024, it was 9.2 billion. I mean, literally just in the most recent quarter, it was $3 billion, up 42% year over year. Look at those year over year growth rates in the middle. I mean, what other company is growing like this? I mean, absolutely impressive. So they also made a nice 275 million in net income, up 55% year over year. So they're growing their profits. But the reason this one's kind of been struggling recently is because of the government regulation. So that's it's kind of being priced in there. Yeah, hey, yeah. Linktree and bio, first link there. So let's see. Yeah, what up, Jeff Mack? What's up, man? So here's Open Door. This is one I would stay away from. There were basically a bunch of activists saying this is like a $50 stock, and I just don't believe it. This stock is really begging for low interest rate environments because they're so real estate heavy. But here's the bad news: if we go to the net income right here, they're losing close to 100 million of net income every quarter. If you go to the market cap, it's a $1.8 billion company. So they're losing like 20% of the market cap a year. And it's even more than that when you consider this is all just some meme momentum rally. So I would just completely stay away from Open Door. I probably think this is just going to keep on going lower. But there could be some more juice in it. I don't know. But one I'm staying away from. Do you look at some low caps? Yeah, we'll look at GHM. That's a small cap that I do own, actually. Yeah, I don't want to look at SBET. It's not a great one, Peter. My bad there. Oh yeah, MP Materials as well. I want to check that out. So let me go to my Roth IRA real quick. I'll show you a company that I just bought in my Roth IRA. This is ticker symbol GHM, Graham. And check this out. We don't own a huge position in them, but yeah, hey, sorry, hold on, guys. So yeah, if we look right here, um, we're up 8% all time on them. So let's see right here, GHM stock. Well, I'll show you why I bought this company. So they're pretty close to an all-time high. Yeah, look at that. They're pretty much at a new 52-week high right now. But here's why, in my opinion, they deserve to be doing this good. Because if you look in the top right, they're still a very small company. You see market cap only 602 million. So that's a very small number. So this is still a very small company. So do beware of that. And I want to show you the financials here. Hopefully this loads here. So yeah, here we go. Here's what I like about them. So this is a $600 million company making a couple million every quarter. So you're paying 600 mil valuation for a company that makes, a couple mil, which is pretty good. And it's growing. The net income grew 220%. The revenue's up 21%. So this is one I really like, and I chose to put a small amount in them. So, oh wait, there was a stock someone said. Oh, APLD. What up, Isaac? So APLD, and UEC. Yeah, that's a uranium mine company that UEC bought a mine from Rio Tinto, a uranium mine. So let's see. I wanted to go to NVIDIA's portfolio and show you APLD because this is all the stocks NVIDIA owns. NVIDIA owns CoreWeave, ARM, and a bit of APLD. And APLD had a huge partnership with CoreWeave. Shocker. NVIDIA owns both the companies and then they go into a huge partnership. But here's why I like APLD. They're a data center hosting business, but I really like them for the cloud service business. And I just like showing you the numbers for yourself. Here's why I think they have been doing good. I mean, look at this. Cloud service business, the revenue's up 220% from the previous year. I mean, pretty ridiculous growth. So that's what I like about them. So they're still losing net income every quarter, but the hope is they'll kind of outgrow that. So besides the fact that NVIDIA owns them, I'd like the growth there. Yo, what up, SATY? What's up, man? What app? Yeah, hey, this is a brokerage. So if you want to get it, user21, it's in the link tree in my bio, the first link there. So yeah. Hey, what up, Jello? Happy Sunday. So yeah, let's look at UEC real quick. This is a uranium play. But I like Cameco more, but we'll check this company out. And I got a new phone yesterday, so hopefully I'm still trying to get used to some of the stuff on Webull. It deleted a bunch of my watch list and stuff. But anyway, here's UEC Uranium Energy. The stock is at an all-time high right now because of uranium's been doing so good. And yeah, you basically go to the balance sheet here. Really good balance sheet, no debt, lots of cash. Let's see. The revenue just kind of took off. Look at that. Went to 50 mil. But yeah, the best uranium play is probably just ticker symbol URA. It's the uranium ETF. And I would just pick this one right here probably instead of UEC. If I just wanted exposure to that. Yeah. So let's see here. Thoughts on Luffy, what's up, dude? So he said PG stock, Procter and Gamble. So yeah, this is like a consumer staple company. They own so many businesses that you've heard of before, like Old Spice, Tide, a bunch of brands. And even if we go into a recession, this company still does good. Their products still sell. You still need like toothpaste and stuff like that. And you also get a nice yield here. So first off, you get a 2.5% dividend yield. Payout ratio is 63%, so they have a lot of room to raise the dividend, which is pretty cool. And yeah, look at that fabric and home care, baby, feminine products, beauty products, healthcare. So yeah, I love how diversified the revenue streams are. And if we go to the net income down here, I mean, they're making a good chunk of change. Look at that. Net income is like 3 to 4 billion every quarter. So pretty good. IDK said, what app is this? Yeah, hey, it's a brokerage, link tree in bio, very first link there. Sorry if people keep asking. So someone said SNDL. So SNDL, is that Sundial or what is this? I don't know. SNDL. So dang, the stock's at an all-time low. That's unfortunate. Yeah, very small company, $300 million market cap. So they're in this business. I can't really talk about what they do, but yeah, here's why the stock hasn't been doing good. Remember, the whole company's worth 300 mil, and look at that. They lost 60 million last quarter, 15 mil, 19 mil. So they're just losing a lot of money. The trend isn't really getting better. So that's kind of been putting some pressure on their balance sheet. So yeah, I don't know about that one. Now, it's just an industry that doesn't have favorable growth. Probably not an industry you want to buy and hold. You maybe want to trade that sector. What do you think of someone that wants to invest 100 a week? Got 15 years to retirement. Oh, dude, you want to go full. Again, not financial advice. Go like growth. Pick the S&P 500 or QQQ. This is the NASDAQ 100 strategy. QQQM is the lowest expense ratio version to get to exposure to the NASDAQ 100. It's the exact same ETF as QQQ, just with a lower expense ratio. Or you can just buy the S&P 500 with ticker symbol VOO. You should just get 7 to 8% a year. It is tough to buy though because it is at an all-time high. But again, this is an asset that in a couple of years from now, it's just going to continue to just keep on hitting new all-time highs. I think that we might have a correction. Hey, look, we can't really look at this stock right here. Last time I covered SBET, the stream got taken down, so I just can't cover that sector, man. Sorry. Thoughts on the Figma IPO? Yeah, I'm not buying it before the IPO, but I'll check it out. I want to see some financials. Can you repeat what you said about the QQQ? Yeah, so QQQ is the exact same ETF as QQQM, but QQQM has a lower expense ratio. Obviously, Invesco, they own both of them, are going to advertise the QQQ ETF because it has a high expense ratio. So if you're just buying and holding an ETF, pick up QQQM over QQQ to save on expense ratio fees. Sorry, I'm saying QQQ a bunch. So let's keep going here. Microsoft, Apple, and NVIDIA make up 25% of the Qs now. Yeah, man, that's because they've been performing so well. So yeah, actually, someone said NVIDIA. Yeah, we'll look at NVIDIA, man. With the new earnings tailwind behind, NVIDIA and AMD can now ship their chips to China, which is great news. Yeah, so NVIDIA is pretty much at an all-time high. Look at the market cap, 4.23 trillion, absolutely ridiculous. And yeah, check this out. I mean, obviously, we know they sell GPUs, 20% PC GPU market share, pretty impressive. And did y'all see the Lucid deal? Lucid made these cars for Uber. Uber's buying 1.2 billion of cars from Lucid, and those Lucid cars are using NVIDIA's automotive software. So NVIDIA has a small automotive business, but obviously the big winner here is the bottom line. I mean, they're literally making 15, 20 billion of net income a quarter, and it just continues to grow every quarter. And at this growth rate, what's it going to be this time next year? So absolutely impressive. IXRN, thanks so much, dude, for the 14 roses. He said, show some low caps. I like the risky stuff. Yeah, so I'll be quick. I don't love it, but here are three really small caps: GHM, DCTH, and TSSI, and InnoData as well. But all these have market caps under 700 million, so very small companies. Yeah, I'm on an iPhone. What's up, man? So, yo, Cruz, hope you're having a good Sunday, brother. Yeah, Jacob, I can't cover those stocks because of the sector that they're in, and every time I cover stocks in that sector, TikTok takes down the stream. But what's up? Thank you. Hey, yeah, if y'all want to support me, by the way, best way to support me is go subscribe to my YouTube channel, watch the stream from there. I'm streaming on YouTube right now, and TikTok keeps taking down my stream and stuff, so I'd appreciate if you subscribe there. By the way, I sell nothing. I don't have a course, book, Discord. Oh, my YouTube channel is called Nathan Robert. You can just type it into YouTube, or it's in the link tree in bio. I'd appreciate if you watch it from there. But anyway, let's keep going. Here's IBM. Yeah, IBM just reported earnings, and look at that. They had a not so good little gap down on there. Can you talk about the short interest? Yeah, if you basically go to the bottom right here, you can see the short interest on how much. So down here, 1.95% of all IBM shares are being short, which is about normal for a stock. But here's the thing that I like about IBM. It's actually the yield. So if you buy the stock, you actually get a 2.6% dividend. They're actually pretty growing in quantum right now. But yeah, here are the three main sectors of revenue: software, consulting, and infrastructure. So I like how diversified that they are. Three big segments there. But let me see what they do for earnings. So they beat on revenue, barely beat on net income, and they beat on EBIT. So they triple beat, but maybe it was the guidance. That's kind of what happened with ASML. ASML had phenomenal earnings, but the guidance wasn't good. So yeah, hey, thanks, Cruz. Lucid had a good 3 to 5 year outlook. Yeah, man, with the new huge order from Uber. Treasury's brokerage accounts. I'm with Robinhood, but I'm like, hey, Tommy, here's the thing. Yeah, I just do both. It's no burden to have multiple. It's just an extra little 1099 form already filled out. So yeah, I'm going to follow the YouTube right now. Yo, IDK, I'm going to give you a follow, man. Thanks so much for subscribing to the YouTube channel. Yeah, I'm trying to build up the channel. Yeah, just go watch the stream from there. And if you do the very beginning of the stream is the best. So yeah. Based on RSI, Nvidia is being overbought. Yeah, I can understand that. So someone said, or Isaac said, Grab. So yeah, we were just talking about Uber. Here's a stock that Uber loves, and this is ticker symbol GRAB. What is Grab Holdings? Well, this is a company that does exactly what Uber does, but in other countries. So here's where the revenue comes from. Notice the US isn't on here, or Canada. So they do exactly what Uber does in all these countries, and they've gotten so much attention that Uber decided to buy the company, or is now the largest shareholder. Uber owns 13% of all the shares. So if you own Uber stock, you technically own a little bit of Grab. They have no net debt. They're making net income every quarter now. The free cash flow is ridiculous. 13% of these free cash flow goes back to Uber stock. So I really like that one. I think they're going to be a winner. Toyota also owns 5% of them. So, we can look at Uber too. Why not? I'll be quick about this one. So, Uber took a huge stake into that company. Here's why Uber can just easily afford that. I mean, look at the free cash flow they're making, 2.25 billion just in the most recent quarter. I mean, pretty ridiculous. I mean, they're making 1 to 2 bill a quarter. The net income's really strong as well. So, Uber just has a lot of money to play with. Yeah, and look where Uber's revenue comes from. Most of it's from the US, then UK, and then these other countries. So that was genius for Uber to buy a 13% stake in them, gave Uber instant international diversification. Yo, no way, Cruise, with the $1.99 super chat. No way, man. Thank you so much. He said, I feel like UNH is getting too obvious to pick up. So let's go check out UNH. Yeah. Yeah, you're right, Jeff Mack. Yeah, if you deposit 100, yeah. Yeah, Tommy, if you want to sign up, link in the description. If you want to use my affiliate link, I'd appreciate that. But anyway, here's United Health right here. I think it's worth a nibble, not a full size position, but like a quarter of a quarter size position, a really small position, I think. Yeah, so because I do feel like in a month or two from now, it probably might be 10% lower, but that's why it's worth maybe like not even one share, like zero point 0.1 share. And if only when it drops 10-20%, then buy more. But yeah, look, here's the thing. You get a 3% dividend on this company. The PE ratio is collapsed right here because if United Healthcare gets accused of fraud, they will get kicked out of Medicare and Medicaid for 5 years. And that would be devastating because that's like half their revenue. And we're also a customer. We literally use their OptumRx business, and the OptumRx revenue has just exploded. It's at a new record. So obviously the future is very uncertain, and that's the thing. But with this PE collapse, I mean, the PE is pricing in like the net income to fall 30% plus. And I don't know if that's going to happen, or maybe, I don't know, man. So I think it's worth a small little nibble, but again, very, very small nibble. Are you going to make this stream a video on YouTube? Yeah, Kyle. Yeah, I'm streaming right now on YouTube, and after the stream's over, you can still replay it and everything. So yeah, the very beginning of the stream are the best parts. I like go over the stock of the day and stuff. So yeah, what up? Ethan said, how much you at? What do you mean there? What does it mean when it's a non-qualified dividend stock? X3. So yeah, Joe asked, so a non-qualified dividend from like a realty income from a real estate investment trust just means it's taxed at short-term capital gains. Here's the really cool thing about me and my tax bracket. All these stocks in here paid qualified dividends, like McDonald's pays me a qualified dividend. And since it's a qualified dividend, it's taxed at long-term capital gains. And it literally is, even though this is in my taxable account, whenever I receive this $23, it's tax-free even in my taxable account because they're paying a qualified dividend. But with these other REITs, the super high-yielding real estate investment trust, they pay a non-qualified dividend. And that's taxed as short-term capital gains in the taxable account. And you pay like 15% tax or more. So, which sometimes it's still worth it. Again, not financial advisor. I'm no expert, but I do own a company that pays non-qualified dividends. I own Main Street Capital. This is one of the few stocks that pays monthly dividends. So, and they pay non-qualified dividends. So I bought them in my Roth IRA. So yes, sir. All right. So what app are you using? Hey, yeah, it's in the link tree in my bio. First link there. Thanks so much. Yo, Brandon Marketflow said he subscribed to my YouTube channel. Yo, I'm going to give you a follow, man. Thank you so much. Yeah, I'm trying to build up the YouTube channel. Hey, yeah, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio if you miss anything. So here's a stock that I'm going to give an unpopular opinion for, but here's Tesla. So yeah, let's go look at Tesla stock, So the thing is with Tesla, they just reported earnings and they were not good. So we can kind of see their total vehicles delivered. It fell 14% year over year. So that's the kind of hard part. Here's the valuation. If you go to the PE is 188. So a really high PE for a company that's kind of not growing anymore. If we go to their automotive segment, it's actually down 12% year over year. But I think there's good news with the energy business. How's that doing? Let's go check it out, actually. Oh, actually, no. So that fell 7% year over year. So both segments of revenue fell. Obviously, the huge market cap is pricing in a lot of growth in the future from the robo-taxi network, the cyber cab, and the Optimus Prime, whatever. But I think it's tough to pay that valuation right now, especially with the margins that just collapsed. If you look at the revenue, it's down 12. Operating profit, it's actually down 58%. Here, they had a little shenanigans on their net income. Look at this. Their operating profit, which is before tax, is 920 million. How is their after-tax net income 1.2 billion? That means there was a little bit of shenanigans on the gap. They frequently do that, actually. There's been so many quarters where they sold an asset, like they actually sold some Bitcoin one quarter. That's the only reason they were net income positive. So again, if I judge Tesla like any other company, I don't think that one's a good buy right now. But yeah, let's keep going here. What's PE? Hey, the PE is just the net income multiple. So right now, Tesla trades at 188 times net income, which seems a bit high to me. So, and that's okay if a company has a high valuation, as long as they have high growth. And for me, I'm just not seeing the growth of Tesla. I mean, actually, it's negative. Margins collapsed. And so anyway, here's another one that I feel bad. Or actually, no, let's look at this one first. Here's BlackRock. So has anyone heard of BlackRock before? It's like the asset manager. And this company is actually benefiting a bunch from their ETF that they made for Bitcoin. So if anyone heard of the IBIT ETF, it's like the BlackRock Bitcoin ETF. And check this out. Here's where the revenue comes from. And if we go to their alternatives revenue, and this is where their Bitcoin ETF revenue is included, look at how it just spiked up. You know, it was a cool 400 mil a quarter, and it grew 80% year over year to 700 mil. So the alternatives has seen some nice growth there. You know, they're just so diversified. We go to the net income down here. I mean, look at that. 1.7, 1.6 billion in net income every quarter, pretty much. And you get a nice yield here, a near 2% dividend. They raise their dividend every year. Wow, you get $20 a year in dividends. So, cool. Oh, wait. Okay, let's see here. Thoughts on SoFi? Yo, dude, SoFi is one of my favorite fintech stocks. I do own this one, and I regret every share I've ever sold of it. So yeah, here's my 24 shares. Yo, actually, when I zoom out, I actually got pretty close to the bottom here. But yeah, here, wait, where did I buy my shares? I think it was right. Well, there I was buying some back there. Wow. I was right here. So yeah, this is where I bought most of my shares. So what day was this? January. Okay, so let me go back to here. Here's why I think SoFi deserves to be doing this good. They deserve this high valuation because they're super growthy. So if we go to their financial services revenue, because SoFi is a fintech, they have their own banking charter. Look at this. It's literally grown 101% year over year. I mean, the financial services revenue has doubled. I mean, that's what you want to see for a company. So that's what I love with SoFi, the growth there. Also, the lending revenue, you know, student loans forgiveness just got canceled. That's great news for them. So the revenue's up 25% on their lending revenue. And this is a company making net income every quarter. This is a very profitable company. You know, a lot of people used to not take SoFi serious. They used to lose a bunch of money, but now they're profitable, growing like crazy, especially that fintech revenue. I mean, it's crazy. BlackRock is loading on Ethereum too. Really? I didn't know that, Isaac. What's up, man? Yeah, happy Sunday, guys. What's a good spot to buy SoFi? Probably under 20. Yo, Evan, what's up, man? He said NVTS. This is the stock that just got saved by NVIDIA. So if you're wondering, why did this stock gap up like crazy? There was no earnings. It was just NVIDIA saving the company because they were actually priced for bankruptcy before that partnership. It was $1.50 a share, and now it's $8. And here's kind of why the stock was collapsing. If you look at the revenue, fell 40% year over year. The net income, they're burning a lot of money every quarter. And look at that. When you lose net income every quarter, that's what happens to your balance sheet. Notice the assets just tick, tick, tick down every quarter. So their cash is getting wrecked. But anyway, that NVIDIA partnership saved them, and I'm waiting to see their next kind of earnings here. Here's a really nice stock. So here's Take-Two Interactive. How many shares do you buy when going in? It just depends. Sometimes if it's a risky company, I won't buy much. Yo, we'll look at NU stock. I love that company. So here's Take-Two though. This is the company that owns Rockstar Games. So if you've heard of Red Dead Redemption, GTA 5, this is the stock that owns them. And this company has an asset called GTA 6. I'm sure y'all have heard of it. Basically, they have this asset. They're about to release GTA 6 that as soon as they release this game, it's literally going to be one of the biggest games in history. It's going to bring in billions as soon as they release it. And I heard the price is going to be pretty steep. And I'm seeing people like, hey, I'm a grown man. I don't care. I'll pay $300 for a game. So, GTA 6 is going to be huge. And basically, you're waiting for this company to release that game because there's so much future growth. Basically, the stock's doing good because there's so much future growth coming from GTA 6. And they're perfecting the game. So whenever that comes out, the revenue and net profits are going to spike up. They're going to sell like skins and DLCs and all that stuff. So, hey, let's see what they do. Maybe even like some monthly subscription that could, and they own some other games as well. I think they own The Sims. But here's a really cool stock as well. This is NU. This is actually a company that is a crypto bank out of Brazil. So yeah, if we go to where the revenue comes from, do note that 92% of it comes from Brazil. And it's a crypto bank. And guess what? South America is where crypto is most popular because their currency sucks down there. And look at the profits this bank is making. And also, no, Berkshire Hathaway, which is Warren Buffett's like a company, Berkshire Hathaway owns some of NU. So, hey, Warren Buffett and his team saw something in this stock, but look at the profits here. I mean, this is pretty ridiculous. So 400 or 500 million of net income a quarter. It grew 50% year over year. So yeah, I do like this one, but I think the fact that it's in Brazil it's a great news because that's where crypto is popular, but it might lead to just it not being able to trade at a high multiple. So I don't know. I love the growth there. I do love NU. I would actually consider buying that one. So yeah. Um let's see here. Oh, Carson said GameStop. So there's only one saving hope for GameStop, and I don't really like to cover GameStop because it's kind of a meme company, but there is one good thing about the company that actually pretty much impressed me. Uh-oh, hold on here, guys. I accidentally disconnected my phone. Okay, there we go. So here's GameStop. So here's the one thing I'll say about this stock. Just remember this. If you look in the top right, you see market cap. This whole company is worth $10.4 billion. So remember, the whole company at GameStop is worth $10.4 billion, and this company has $6.4 billion in cash right now. So literally 64% of their market cap is just their cash on hand, and they have no debt either, debt-free company. But also the fundamentals are collapsing here. Look at these revenue declines. So the business is collapsing, but basically they're trading at half their cash. And I think they own some Bitcoin too. And if you're wondering, what happened, why did the rally always get sold off? How did GameStop get their hands on 6.4 billion of cash? Well, basically they've diluted the crap out of you. Every time the stock goes up, they issue shares. It happened right here. The stock collapsed because they issued a bunch of shares to buy Bitcoin and load up their cash position and fortify their balance sheet, pay off all their debt. And that's kind of the smart thing for them to do. But anyway, that's not one I'm too interested in. So yeah, let's keep going here. Oh, hey, New Jersey, what's up, man? He said FSLR. This is my favorite solar play right now because they're very profitable. So yeah, they have still been getting a bit wrecked though from like the incentives being removed. Like how the Inflation Reduction Act gave incentives to solar, and I think they just got taken away. So here's what I like about them though. They're very profitable. Look at this. They're literally making 300 mil of net income a quarter. Net income did fall 10% year over year though. And so that's bad news. Revenue is up 7, net income's down 11. So that means their margins fell 16% year over year. Not great, but still one of my favorite solar plays. I like them more than Enphase Energy. Yeah, what up, Sean? Yeah, Enphase Energy is pretty decent, but let's look at Starbucks right here. So Starbucks, yeah, this stock has unfortunately been flat since 2019, and that's because what happened? Yeah, hey, if you go to the link in the description, it's the first link there if you want to get this album on. It's also in the link tree in my bio, very first link there if you want to get this brokerage I'm on. Anyway, look at Starbucks right here. A lot of people like them for the dividend. You get a 2.5% dividend, but here's the bad news. Just know this. Their dividend cost 61 cents of EPS a quarter. Dividend cost 61 cents, and look at this. If we go to the EPS, the most recent quarter, it was 34 cents. They literally couldn't afford the dividend the most recent quarter. The net income fell 50% year over year. And sadly, that wasn't some one-time adjustment. That was real. So yeah, the margins at Starbucks have unfortunately collapsed. It went from a 9% to a 4%. So that's what you do got to watch for Starbucks. You want to kind of see the growth come back here. And it's just rough because they might actually be at risk of having to cut their dividend. I hope not, though, but that's why I think the stock has been flat since 2019. Uh, if I was going to pick a company, I'd probably pick a McDonald's, and that's what I do own, by the way. If I go back to my Robinhood account, McDonald's, is actually a real estate royalty company. You go spend $100 at any McDonald's, $4 of that goes back to the parent company as a royalty. And look at this, they're also recession resilient. Look in 2008, McDonald's didn't fall in 2008. It was actually the best performing stock in the S&P. Same with Walmart. So they actually bought and acquired a bunch of new land in the recession. So anyway, oh, someone said ET. Yo, I'll give you a quick warning on this stock right here. So a lot of people look at this stock and love them for the dividend. And I will say this company has a sustainable 7.25% dividend. But do know this is not a stock. This is actually a unit. If you're buying units, this is actually an MLP. So if you buy the stock, they actually will give you a K1 tax form at the end of the year. And it's scary. I accidentally bought one of these and I had to pay $200 with an accountant to get it filled out my first year investing. So that wasn't fun. So don't buy that stock unless you're prepared for a K1 tax form, which are notoriously hard to fill out. So because you're technically a partner in the company, you're not a shareholder, you're a partner because that's an MLP, a master limited partnership. So yeah. Let's keep going here. Someone said, where do you think the VOO is going from here? Yeah, it's tough. Here's what's so weird. The S&P 500 was up every day this week, or last week actually. Monday through Friday, the S&P 500 went up every single day. But I don't know what's going to happen. It could just keep hitting new all-time highs. I don't know. We're in the roaring 20s, I guess. So Apple stock, yeah, hey. Let's check out Apple. I got you. So yeah, is Moomoo publicly traded? They are actually, and I own their stock too. What's EPS? Yeah, EPS is earnings per share, which is net income per share. So yeah, here is Apple stock. And actually, this phone I'm on, I actually got it yesterday. So I just bought a new iPhone. My old one was like super old, and I'm still going to use that phone. But anyway, look at this. Apple, half of their revenue comes from their iPhone, which best product they will ever sell. And look at their market share for smartphones. They have a 19% smartphone market share. A lot of people are locked in the Apple ecosystem, but the best part about Apple is actually the services revenue. Whenever you go buy something in the App Store, you go on Clash of Clans to buy some gems, you spend $10. Apple takes a 30% fee on that. So it's literally like a royalty, high margin fee that goes back to Apple if you buy anything through the App Store. So that's where they get a lot of net income from because they don't really have to work for it. Then they sell Macs, wearables like the AirPods and the iPad. But check this out. Here's why Apple is a bit affected by tariffs. Like, did you know only 36% of Apple's revenue comes from the US? I always thought it was more than that for some reason. Then they're in EU, 25%, China, 17%. So yeah, they make a boatload of net income. Look at this right here. Here's actually the best part about Apple is the buybacks. If we go to the cash flow statement, and we go to the buybacks, yeah, right here. So if we look, they're literally at the top there, they're literally spending $23 to $25 billion every quarter buying back their own stock. And their dividend only cost $3.76 billion. And, they have so much room to raise their dividend. I just love Apple, shareholder-friendly company. So I think that's a stock you want to just hold forever, hold for the long run. So yeah. What about Main Street Capital? Yeah, hey, I do own that one. Yo, what up, David? How's it going, man? Happy Sunday, guys. Yeah, we'll look at AMD as well. So if we head over here to my Roth IRA, this is one of the few stocks that pay a monthly dividend. Ticker symbol Main and Main Street Capital. I do own them in here. And so yeah, they have like a 4.48% dividend yield, and they pay monthly. This is a BDC, a business development company. So they do like first lien loans, second lien loans, preferred equity, and they're trading at like 2x NAV net asset value. They're a bit expensive, but I do like that one for a dividend play. You buy it for the dividend, really. How do you become so knowledgeable? Yeah, you just like read books. Most someone said, hey, most streamers would sell their course or something. I sell nothing, by the way. I don't have a course, book, Discord, WhatsApp, Telegram. The main way to support me is just subscribe to my YouTube channel. I'm streaming on there as well. And yeah, hey, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Yeah, hey. And thank you for y'all on the YouTube stream. Don't forget to drop a like for me. I'd really appreciate that. We stream every Sunday, and I try to stream every day. But here's AMD right here, Advanced Micro Devices. So they've actually had an incredible rally the past couple weeks here. Look at that. The most recent candlestick, they're at like a new multi-month high. And also show you my position in them. I like being transparent here. Yeah, here's my AMD position. I have, it's the blue line there. I got 12.83 shares at $124 a share. So this is no longer advanced money destroyer. This is like advanced money duplicator. So yeah, let's go back to the analysis right here. Hey, um thanks for the follow there, pork chop. Yeah, so we go to AMD. Here's the good news about the company. Check this out. Obviously, we know they sell GPUs. They have a 17% PC GPU market share. Pretty nice. But AMD is really a data center play. Check this out. Half of their revenue literally comes from their data centers. And look, it's up 60% from the previous year. I mean, this is incredible growth. What's it going to be this time next year? AMD is perfect for them to get into the data centers because if anyone else is in the data center business, they're going to order chips from AMD or NVIDIA. Well, if AMD just makes the data center themselves, they just supply themselves their own chips. Pretty genius. So if we look at the free cash flow here, it's really exploded, up 100% year over year, and the net income as well, up 400% year over year. And they have an absolute fortress of a balance sheet. Look at this, no net debt, liabilities are low, the cash flow is crazy. So AMD is one that I'm holding for the long run. And there's that earnings tailwind of AMD and NVIDIA now being able to ship their chips to China. So let's see. Malik said, STLR. What's your trading range? Not sure. Wait, STRL. Wait, is that Sterling? Oh, hey, this is Sterling Infrastructure. So this company just hit an all-time high. This is like a competitor to my Powell Industries. So yeah, look at that. E-infrastructure solutions, transportation solutions, and building solutions. Cool. Let's check out the net income. So yeah, look at the profits here. This is probably why the stock's at all-time highs. Usually when a stock's at all-time highs, it's because the profits are growing like crazy. And look at this. The net income, these year-over-year growth rates are very strong. So yeah, looks like net income is at an all-time high. The margins are growing like crazy. So yeah, they're deleveraging their balance sheet. Great news. Yeah, I see why that one's doing so good. They kind of remind me of a Powell Industries. So hey bro, do you think of selling Zoom? So I want to sell Zoom, but it's just too cheap to sell. And I am down 51%. Where did I buy Zoom, man? It's been years. Look at this. It's been 1, 2, 3. It's been just around 4 years since I've bought Zoom. And here's why I can't sell them. So if you look at the top right, the market cap, it's a $22 billion company. First off, they're making 200 mil of net income a quarter. So $20 billion company with no debt. And let me see how much cash. $8 billion of cash, $8 billion of cash, no debt, making a couple hundred million of net income every quarter. They just sell a commodity. I mean, it's just a commodity at this point, so many competitors, Microsoft Teams and stuff. So I don't expect to really make my money back there, but it's too cheap to sell at this point. So yeah, what up, Bogdan? Bogdan? How's it going, man? So let's keep going here. Palantir. Yeah, let's check out Palantir and waste management, LAES. I want to check these out. So first off, Palantir has been like an insane performer. Check that out. The stock is at an all-time high. So congrats if you own this company. You have to be up on your position. And here's why they've been doing so good. They're just so growthy. Half the revenue comes from the government. 55% of the revenue comes from the government. And look at the government revenue. It's up 45% year over year. So many police stations are using Palantir. And the commercial revenue as well is also at a record, up 33% to a new record. So Palantir is super growthy. They're AI. They're making net income every quarter. Absolute, fortress of a balance sheet, no debt, lots of cash, like $6 billion of cash earning interest. So yeah, I can see why they're doing so good, but the valuation is a bit high. So I don't think I can pay the valuation. So let's see here. Waste management. This is just like a perfect buy and hold stock. Here's an industry that's probably never going to go away. You're throwing away your trash. So, waste management. Let's see how they're doing. So also, I think Bill Gates is a huge shareholder. Let me check that actually. Yeah, look at that. The second largest shareholder of waste management is the Bill and Melinda Gates Foundation or whatever. And also, here's the net income. I mean, they're making $700 million of net income a quarter. You also get a nice 1.4% dividend yield. So yeah, that's like a perfect buy and hold dividend growth company. How'd you learn to invest? I have just read books, done a lot of research, articles, YouTube videos. Why does my app say margin call? Hey, that's not good. Let's see here. Please look at Sezzle. Yo, I love Sezzle stock. Yo, this company right here, not financial advice, but I would recommend you guys putting this stock on your watch list because very few companies have impressed me like this stock has. Like, this is the company you really just want to buy and hold forever. Like, this is incredible. The revenue is doubled, more than doubled. It's up 123% year over year. So they made 104 million of revenue, and of net income, they made 36 million. And the net income grew 350%. This is ridiculous. They literally have a 30% net margin right now. I mean, this is ridiculous. So they're deleveraging like crazy their balance sheet. Cash flow grew 50%. I mean, everything about this company is like at an all-time high. So yeah, dang. The operating profit was 50 million. So they have like what, 50%, 70% gross margins. Anyway, SEZL, incredible growth company. I would not financial advice, put that one on the watch list. Yeah, no problem, Adrian. Hope you're having a good Sunday, man. So what platform is this? Yeah, hey, this is a brokerage right here. If you want to get it, it's in the link tree in my bio, very first link there. So let's keep going here. Yeah, hey, MJ. Yeah, hey. It's in the link in the description. Appreciate you. Or the link tree in my bio. So yeah, let's keep going here. Thoughts on Upwork, MicroStrategy? Well, here I saw MicroStrategy a few times, so I think they changed their name to Strategy. I'll be quick because this is like a momentum Bitcoin stock. So basically, MicroStrategy just dilutes the shareholders to buy a bunch of Bitcoin. And look at this balance sheet, dude. All the assets are just the Bitcoin that they own. And look at the most recent quarter, how the assets have just exploded. That's because they diluted the shareholder by a ridiculous amount. You know what? Let's see if we can find that for you. Let's see how much shares they issued. They issued $4 billion of stock in the most recent quarter. The last quarter, they issued $15 billion of stock, rose cash, and just bought Bitcoin with that cash. So, hey, pretty interesting. So here's a company that I don't know. It's like a mixed bag here. So this is SoundHound AI. NVIDIA used to own this company. Then NVIDIA sold out of them on this day. That's why they gapped down right here. But I've been watching them because there's one thing you want to watch with SoundHound AI. The one thing you want to watch here is the subscription service. This is like the saving grace here. Check this out. This is incredible growth. The subscription revenue literally went from nothing last year, 600,000 to 25 million just in the most recent quarter. I mean, this is all like recurring revenue. And at this incredible growth rate, what's it going to be this time next year? So that's what you want to watch for that. Also, their royalties have kind of collapsed. Their high margin royalties fell 43%. So you're really just watching the subscription revenue growth there. So yeah, they are still losing a bit of money. But their balance sheet's good after issuing some shares. How about crypto? The only crypto I like is Bitcoin. What is a good price for Sezzle? What does Sezzle do? Yeah, Sezzle's a fintech, kind of like a Dave. Yo, what up, Paul? He said IXHL stock. What is this company? IXHL. So yeah, we don't really like to cover these kind of stocks. If you look in the top right, $98 million company. Let's see, are they losing money? So the whole company's worth 98 million. And they're losing 4 million a quarter. So over 5% of the market cap, they lose a quarter. And the revenue was $12,000. So yeah, I don't know about, that's one I'd stay away from. Maybe that could be a fun little swing trade, but not for me. So let's see here. Big week for SoFi. Yeah, man, SoFi will be interesting. And oh, wait, hold on. I saw RTX. Yeah, Ishwar, what's up, man? So RTX, this is your main aerospace and defense play, in my opinion. They own some of the best assets like Raytheon. And look at this, the stock's at an all-time high just because the aerospace and defense industry has been on fire. But even if you buy the stock, you still get a 1.64% dividend. So the dividend's pretty nice. And look at this, they own Pratt & Whitney, Collins Aerospace, another great company. And then they merged with Raytheon like a couple years back. So great assets over here. The net income, let's see what it was. Oops. Yeah, wow, net income of, they pretty much just make like 1.7 billion of net income a quarter. Yeah, so that's really good news. I like Raytheon. So, what was the other stock? If you missed anything, you should go on the YouTube replay. I'm streaming on YouTube as well. Hey, that's the best way to support me. Just subscribe to my YouTube channel. It's called Nathan Robert. CMCSA. This is Comcast. Let's look at Comcast right here. The stock has been struggling for a while. Look at that. Same price that it was back in 2016. But here's what I absolutely love about Comcast. And even though I think this one might still not perform too well in the future. Like, I don't know if Comcast will outperform the market in the long run, but look at this valuation. I mean, absolute, like, less than a commodity multiple. I mean, an APE, and that's real. They're trading at 8 times net income. That's because, obviously, the residential connectivity business, this is kind of just going to slowly go away. So, it fell 1.2% year over year. But then they have these other business, like They have the studios business, like Universal Studios. So Comcast owns like Despicable Me and a lot of those other movies. But they also own theme parks. So yeah, they're in some other businesses. But here's the best part about the company. They're making, 3-4 billion of net income a quarter. And I want to show you the buybacks that they're doing. So let's see, they're making 3-4 bill a quarter. And the dividend, look, so the dividend only cost 1.22 billion. So they have a lot of room to raise. They're already crazy 3.74% dividend. Look at that. The 4% dividend is only a 30% payout ratio. Anyway, uh, it's it's uh it's an okay company. Which software stock should we look into? Yo, what up, Tay? I like Salesforce, ServiceNow, um, some of those names. Amazon's cool. But should we look at Amazon too? Ubisoft. Yo, what's the ticker symbol for that one? Oh yeah, here's another software stock, Adobe. Yo, I use Adobe nearly every day. I'm on Photoshop or After Effects or Premiere or whatever. So here's Adobe. The stock has actually been hurt recently. The PE is really low, man. A 23 PE for Adobe. And that's because the thesis is being really hurt here. Like I know someone, they needed a logo, and they literally made a fantastic logo in ChatGPT. Like AI made it. So maybe 10 years from now, we won't need a Photoshop, which is unfortunate. But for right now, the business is doing incredible. The digital media revenue is literally at a new record. Same with the digital experience revenue, also at a new record. The free cash flow is ridiculous. Look at this. They're making over 2 billion of free cash flow a quarter easy. The net income is like 1.5, 1.8 billion a quarter. So they're very profitable. But the thesis is really hurting them, the AI thesis. So someone said Tyson. Yo, what up? GK said TSN. Yeah, Tyson Foods. So this company has not been doing too well, unfortunately. Yeah, the same prices they were back in 2016. So, they sell like frozen chicken and stuff. Let's see. So yeah, beef, chicken, prepared foods. So yeah, let's check out the net income down here. So the net income did just go to 13 million. Yeah, hey, try not to spam there. My bad. Yeah, if you want to get this, this is a brokerage Waza. So if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. So yeah, the net income was only 14 million in the most recent quarter. So it looked that I don't know. I mean, that seems pretty normal if you average out the 4 quarters there. So I don't know why they're hurting so much. They still have a 3.7% dividend. The payout ratio is a little high, but I mean, hey, it doesn't look like the end of the world here. I mean, if you average out the 4 quarters, they're still making a couple hundred mil a quarter. They deleveraged a bit. So I don't know. I don't know why they've done so bad. I know there was the CEO's son had some like embarrassing news come out. I heard some story about that. So it was like the CEO or the CEO's son went to jail for a bit. Something weird, man. So anyway, Thomas said, "Can you check APH?" Yeah, I'll be quick about this one. This is one of my best performers. So Amphenol Group had incredible earnings, and basically why? It's because of NVIDIA. NVIDIA has this new NVLink spine product that uses 2 miles of copper cables, and Amphenol is the one that supplies most of those. So that's why the stock has been doing really good. Anything NVIDIA adjacent just does good. And also we can just see that communication solutions revenue up 43%. Actually, that doesn't have the most recent quarter. So if we go to the revenue down here, this fantastic earnings. I didn't even expect it to be this good. Revenue's up 56%. Net income's up 108% to $1 billion of net income. That means their margins are growing 20% net margin, just incredible. So yeah, that's what I like about them. Can we look at CRISPR? Yeah, hey, I think that's a Kathy Wood stock. Hold on, let me go to Kathy Wood's portfolio. I think there's still a startup. I don't know if I like that one actually, but let's go find out. Let's see here. Kathy Wood's portfolio. There it is. Okay, Kathy Wood's portfolio. Yeah, CRISPR Therapeutics right here. So CRISPR. Here's the thing about the stock right here. They've been flat for a very long time, and I think it's because they still don't sell anything. So yeah, if we go to revenue right here, the most recent quarter was 800,000. If you're wondering why does it say 35 million last quarter, that's because they actually sold an asset. So we go to their cash from investing activities. They sold off an asset for 105 million. So that's the only reason they had revenue. So they actually didn't have any revenue that quarter, and they're losing like 100 mil a quarter. So CRISPR's one that I'm staying away from. They're the gene splitting company. ARKK is the largest shareholder, but yeah, I want to see the company actually produce some revenue. It's tough buy. Is Newmont worth looking at? What's the ticker symbol for that one? I think that's the gold play. let me type it in. Newmont, NEM. So I think yeah, this company owns a bunch of gold mines. Let's go find out. So if we go right here, so yeah, look at that. Nevada gold mine and all these other mines as well. So yeah, look at that. Most of these are in the UK. So yeah, since gold has been doing so good, this has been doing good. Look at that, 2 billion of net income in the most recent quarter, 1.5% dividend. So you kind of get exposure to gold with a dividend yield. So hey, pretty cool. Um, so many people say thank you, Kathy Wood. So all right, yeah, no problem, man. So um, is GoPro about to do a new? Well, it's not GoPro stock, man. The Chinese competition have been eating their lunch. There's so many better like Chinese cameras, in my opinion. But here's GoPro. They did have a little like momentum rally. There's no earnings. The stock just like momentum, kind of with open door. Here's the thing: this company has real bankruptcy risk. If you look in the top right, the market cap. So the whole company of GoPro is worth 237 million. So kind of remember that. We'll think about this logically. The whole company's worth 237 mil. You can buy in at that valuation, and you're buying a company that lost 50 mil the most recent quarter, 40 million the quarter before. I mean, they're just burning so much money. I mean, they lost 300 million that one quarter, more than their entire market cap. So that's one I think I don't want to own. But it could be a fun little trade maybe, but not for me. It's one of these. Let me type in Ubisoft. So here it is. All right, cool. Let's check it out. Sorry. So they're actually a really small company, only a $1.5 billion market cap. And dang, look at that. The stock's actually at an all-time low. That's really weird. July 21st. Okay, so let me go do some analysis on this company. So, revenue fell 17%. They lost net income. So that's probably why. So the net income is just really choppy. They're making money, then losing money. So it's a tough buy. I don't know why they've been doing so bad. I got to do more research on this. Sorry, that probably wasn't too helpful. Can't read the ticker symbol of the stocks. Talking about because it's yo, what up, man? Wait, you can't see the ticker symbol on the screen? Hopefully, really? This is my first. I got a new phone yesterday. This is my first time ever streaming on this phone. I hope everything's going good. Someone said Netflix. What's up with Netflix? Yeah, dude, Netflix. I think the company's just having a healthy little sell off. I think this one will go back to all time highs. They had outstanding performance. We can kind of see their premium subscribers right here. Last year, they had 260 million premium subscribers. Now they have 301 million. Is Moomoo available in the US? Yeah, sorry, it's only available. No, his name was sorry. Yeah, it's available in the US and Canada. So yeah, if you want to get this brokerage I'm on, Linktree in bio, very first link there. It's an affiliate link. It'd help me out, or you can just type into. It's a brokerage called Moomoo. But here's the net income. This is the best part about Netflix. Net income grew 45% from the previous year. I mean, they're printing money. They're making $3 billion of net income a quarter. And let me see if they're doing buybacks. So they made $3 billion. They're probably not doing buybacks. Well, they did. They spent $1.5 billion buying back their stock this quarter. $3 billion the quarter before. So Netflix is actually buying back their own stock like crazy. And if we go to the free cash flow here, the free cash flow is pretty ridiculous too, like $2 billion. This ticker symbol is blocked out by your name. Oh, thank you for that. You know what? I haven't even looked at that. So that's, I think if you hold down on the screen and hit clear display, you might be able to view it better. Do you think SPLG, yeah, hey, somewhere, if you want to get this app here, if you go to the link right there, it's the first link in that link tree. I think it's in the description too. So let's look at, he said, how good is SPLG? Do you think SPLG is a good one to get into? Yeah, so this is like this is just the S&P 500. Yeah, look at that. Their top holdings are just the top stocks in the US by market cap. Nvidia is worth 4.2 trillion. Then Microsoft at 4 trillion. Then Apple, Amazon, Meta, Broadcom, Google, Berkshire Hathaway, Tesla. So yeah, I like SPLG. Should perform right in line with the S&P 500. SoFi earnings this week. Yeah, SoFi. Yeah, what up, Anthony? Good to see you, man. Yeah, hope you guys are having a good Sunday. So SoFi Technologies, they do report earnings this week, so that'll be fun to watch. July 29th. So the one thing that's really been leading gains is their financial services revenue. Look at this. I mean, it's had some incredible growth. It's up 101% from the previous year, literally to a new record. They have their own banking charter. So they're a fintech. I love them. And they're making net income every quarter. So net income positive company. Yo, what up, Soul Rack? How's it going, man? What stock would you pick to maximize profits selling puts? Yo, I don't know, man. It's tough right now with stuff at all-time highs. But there's a lot of stocks that I love buying and holding for the long run. What do you think of NUE? Why Moomoo is going to the moon. Yeah, hey, Moomoo. So basically, this app that I'm on right now is publicly traded. I do own their stock actually. So this stock, their stock is called FUTU. You can see Moomoo in the top left, or maybe their FUTU stock, and they've been doing incredible. So switch the revenue to USD here. Look at this right here. I mean, the net income's up 108% year over year, literally to a new record in net income. Revenue's up 82. Yeah, brokerage commissions, interest income. Yo, the high interest rate environment is helping a lot of companies. So interest income's up 53% year over year. But check this out. Users are 26 mil at a record. Client assets, 101 bills. So anyway, pretty cool. Let's keep going here though. Hood stock, yo, Hood, I love them. So this has been one of my best performing stocks. Another brokerage stock. There's Webull too. So what's the let's see here. So yeah, here's Robinhood stock, and I do own them by the way. Here in this other portfolio, here I'll show you my Futu position. FUTU stock is right there. I'm up 52%. The brokerages have been going crazy, and Robinhood, my best performing stock of all time, we're up a stupid like 600% on them. So Robinhood, here's what's so good about them. They're seeing so much growth from the Robinhood Gold subscription. They're making a lot of money from that now, but they're just a growthy, innovative company. The revenue's up 50% year over year, very fair. And the net income, I mean, look at this. They're making a couple hundred million of net income every quarter. If we zoom out, no one used to take Robinhood serious. They were losing money hand over fist. All right. Ooh, here's a company I just stay away from. So, yo, I'm not always just going to be bullish on every stock, but here's one that I actually don't like, and I'd be super careful with this one. So if you kind of look in the top right, this whole company is worth $2 billion. So just kind of remember that. You can buy in at this valuation. This whole company's worth $2 billion. Well, you're buying a company that literally lost $200 million the past 3 months, $1.4 billion the last quarter. And look at that. They just lose $200 million every quarter. I mean, this company it honestly has super high bankruptcy risk, and I think it's just probably going to slowly keep on going lower unless something dramatic changes there. Just not those net income losses are just rough. So, I haven't seen this stock in a long time. A TEM, Tempest AI. This was bought by Nancy Pelosi and her husband. And this is the genomics play. Let's see. And they have some incredible growth. And I actually kind of like this one. I'd put it on your watch list. Check this out. Genomics revenue grew 88% from the previous year. If I'm looking for a stock to buy and hold forever, I want to buy one that has this kind of growth. So genomics revenue is up 90%. The data and services revenue is up 43% year over year. So both segments of revenue are growing very nicely. And yeah, Nancy Pelosi and her husband just bought this one. So yeah, they're losing money still, but they'll kind of outgrow that. What app you using? Yeah, hey, this is a brokerage right here. Sorry if I sound like a broken record, but yeah, if you want to get this brokerage I'm on right now, it's in the link tree in bio, first link. It's an affiliate link too. We'll both get some free stocks if you deposit $100. It's where I like to keep my cash too. Like if you look at the middle of my screen, I keep my cash in here, earns the nice little daily APY or whatever. Anyway, let's keep going. And I actually one of the best part about this app is actually just the analysis you can do on stocks. So let's see right here. Someone said, actually, Rich Tech Robotics. That's not a good robotics play, but Amazon. Yeah, we'll look at Amazon. This is actually my real favorite robotics play. So here, we'll just analyze Amazon for example. So one of the best things about Amazon is their margin expansion right now. So the revenue on Amazon grew 8% year over year. Really good growth, or decent growth. Revenue up 8%, but the net income grew 64%. So what does that mean in English? Basically, the margins are expanding. The margins went from a single digit 5, 6, 7 to an 11% net margin, and it's expected to keep on growing. So that's the good news. So, yeah, Jeff Bezos, obviously the largest shareholder. One of the most valuable parts of Amazon is actually the AWS business. Their Amazon Web Services, they're the largest cloud provider. For the full year 2024, it's over $107 billion of annual revenue. It's actually the most valuable part of Amazon is their web services, not their online stores. This brings the most to their bottom line. But yeah, largest cloud service provider. So, yeah, then, Amazon, they're like an ETF in one. They own Twitch, Whole Foods, robotics software company. But also, here's another robotics stock that I see talked about. This one is, in my opinion, pretty trash. If you look in the top right, it's a $200 million company. So you're paying. It's a $200 million company. I've looked at them. They have no IP, no patents. They don't really have anything. I mean, look at this. The revenue is 1 million, 1 million, lost 5 million. So, obviously Amazon's not a pure robotics play, but I'd way rather own that than an RR. So it's Weeble. No, hey, I do have Weeble as well. Hey, this is Weeble right here. But you know, I don't like this app for analysis. My favorite brokerage to use is this one right here, Moomoo. First link in the link tree bio. Yeah, I do need to pin a link. You know what? Thank you for that, Kyle. So yeah, let's look at Weeble stock too. Someone said BULL. Let's check it out. So BULL stock. What is this company? Well, it's literally just this app right here, this brokerage publicly traded. So let's see how they're doing. They did just IPO. That was right around here. Only 6% of the company is available for free float trading. So actually, yeah, the whole companies were 7.8 billion. Only 2 billion of that is available to trade to the open. They only IPO'd a little bit of their shares. But anyway, it's cool to see that Webull is net income positive. At least in the two most recent quarters, they made 12 mil, 10 mil. So they are making net income, which is good news. But I'm still waiting. I want to see a little bit more. Still waiting a little bit, but I do like it so far. I know I was reading their 10K. I mean, their share structure is a little confusing. They have like Class A, Class B, C. It just looked a little confusing. But yeah, what is let's see, UNCY. What is this right here? UNCY. So this one, look, yeah, $60 million company. Yeah, we're not going to cover this stock right here. Stock's at all-time low. Yeah. Should I invest into different stocks? Yeah, hey, I have a nice diversified portfolio. Would you buy a 2x ETF stock for a swing trade? Yeah, I would swing trade it, but the 2x leverage and the 3x leverage just really destroy you in a down market. And like it'll fall 10%, but to recover that 10%, anyway, it's tough. All right, let's keep going here. FDA play is UNCY. Yeah, I'd be careful. I gotta look at that one. Yo, what up, Catherine? United Healthcare. Yeah, we can look at UNH again. So I'll be quick about this one. Yeah, this is the company that might get kicked out of Medicare and Medicaid for 5 years if they get accused of fraud. And that's why the stock has literally lost over half its value. That's why the PE has collapsed. The future is so uncertain for United Healthcare. But they're literally, this PE is pricing in for the net income to collapse like 40%, which I don't think will happen, but it could. And here's the net income right now. They're making, 4-6 billion in net income a quarter. They had a little one-time adjustment that one quarter because they got hacked and had to pay a huge fine. But yeah, the nice yield there, 3% yield. But yeah, I think that one's worth a small nibble. Like, I mean, a very, very, very small nibble. I think it's probably going to fall another maybe 10%, but it's worth a quarter of a quarter position, maybe, I think. Not financial advice, of course, but what is this one? What up, John? He said PRMB stock. What is this one? I don't think I've ever heard of this ticker symbol. Primo Brands. So, hey, Primo Brands. Let's see what they own, actually. I don't know. Maybe I've heard of them. All right, it's not telling me the brands, whatever. Let's see. So let's go to revenue down here. So revenue is up 42% year over year. So that's good revenue growth. The net income is a little choppy. They lost a bunch last quarter. I want to see the operating profit. Okay, so that was a little one-time adjustment. So they're actually making like close to 100 million actually a quarter. Huh. They sold an asset for $600 million. So that's why the balance sheet did that. So the cash from investing activities, I got to do more research on this company, but huh. Yo, what up, Pinky? Hope you're having a good Sunday. Yeah, happy Sunday, guys. Oh, yeah, hey, thanks, Shelly. Yeah, if you miss anything, you can rewatch it on the YouTube replay. The beginning of the streams are really fun. So, what up, Julian? He said Circle. So, yeah, Circle just IPO'd. Figma's about to IPO, but this is the company that is the stablecoin issuer for USDC. So if you've ever heard of USDC, that stablecoin, this is the stock that owns that basically. And there's been so much favorable regulation towards stablecoins, like the Genius Bill or Genius Act. There were some other things that are favorable regulation towards stablecoin products, which is great news for this company. And this is a profitable company. They made 64 mil this quarter, 50 million last quarter. So I'm actually looking to maybe get into that stock. They're really interesting. They're like a crypto play. PRM is the biggest water company in the United States as of today. Really? Okay, so that PRMB stock was the largest water play, apparently. Yo, Mars said QS, QuantumScape. This is the rare earth play. So this is still a startup right here. This is the one thing that makes me not love this stock. If you go to the revenue right here, you see how it says no data. That's because they've never sold anything. They've never sold a product or a service. It's a startup. And they're not good. They're losing 100 million a quarter. But the US wants to open a rare earth mine with QuantumScape and MP Materials. So that's kind of why the stock has rallied on this day right here. We're trying to get our rare earth minerals from the US and try to be more independent. Because we're especially when we're poking other countries with some tariff sticks, it's good to at least build up our own infrastructure before we upset some other countries. So, oh, here's another cool company, CoreWeave. So yeah, that's a company owned by Nvidia. Man, Nvidia was buying the absolute dip on this company. Let's see, Nvidia's portfolio. So yeah, Nvidia's largest holding is CoreWeave, and CoreWeave actually just bought CoreZ. It's like a Bitcoin mining company, but the stock has kind of been puking recently. Here's the one thing I do like about them. Again, they just IPO'd. There isn't much data, but the revenue grew 420% from the previous year. So I like to see that this is an extremely growthy company. Revenue went from 188 to 981 million, so nearly a billion of revenue. So it's cool to see that they're growthy. Nvidia owns a lot of them. So HUHM said what happens is, yeah, hey, it's actually a brokerage. If you go to the first link in the link tree in my bio there, you can get it. It's also in the description, I think. But let's see. Should we look at this one as well? Here's another startup, or well, not startup yet. So the story has not worked out as investors have wanted. Yeah, hey, Kitty Cat, it's in the link tree in my bio, first link there. I'm on a brokerage right now. It's called Moomoo. It's an affiliate link too. If you sign up, we'll both get free stocks. Anyway, here's Viking Therapeutics. What happened this day? This company got FDA approved to sell a prescription. So they got FDA approved to start selling their product. And here we are a year and a half later, they still have not sold anything. So if you go to the revenue, it says zero because they still have yet to sell anything. So I think investors are a bit disappointed. Plus, the losses are starting to stack up too. They're starting to lose a lot of money. But luckily, they have a pretty good balance sheet, no debt. But I think investors want them to finally start selling a product. They're saying it's about time. Come on, man. What was that previous stock again? I think it was QS, QuantumScape. Um, ah, hey, if you miss anything, you can watch it on the YouTube replay. I'm sorry, I missed that one. Yo, Ash, I don't know if you meant to say UNH, but UNHG. So, okay, so this is United Health 2X ETF. Looks like they just IPO'd. So yeah, whenever United Health goes up 1%, that would go up 2%. So yeah, I guess if you didn't want to buy a call option or something, you could just buy a share of that. Hey, guys, this is my first time ever streaming on this phone. I didn't realize my name kind of covers up the ticker symbol. So I want to fix that hopefully. So yeah, I've seen enough to put Warren Buffett's portfolio. Yeah, hey, Warren Buffett's portfolio, that was right here. These are super investors. They have to reveal their holdings. He owns a lot of the higher yielding names like the Bank of America, the Coca-Cola, the Chevron with like a 5% yield, Moody's, Oxy Petroleum, Kraft Heinz. So yeah, Nancy Pelosi, I think, is on here as well. Where's her portfolio? Yeah, Nancy Pelosi, by SEC law, she has to reveal all her trades because she's a super investor. So she owns a lot of software names and cybersecurity as well. Yo, PanW, Palo Alto, CrowdStrike, Visa. I love all these names. Anyway, sorry, let's get back to the analysis right here. So, all right. Loop. Okay, we'll look at Loop. What is Loop Industries? We'll see here. So, okay, yeah, we don't really cover these names. $60 million company, stocks at an all-time low. Revenue last quarter, but hey, yeah, was that from selling an asset? I don't know. Anyway, yeah, nothing's really blowing me away there. I'd be careful with that name. Yo, that one dude, did you say Powell or POWI? Is that a ticker symbol? Power Integrations. I own POWL, and here's POWI stock. Okay, let's see. So, $3 billion company. The stock's kind of going down the past year. Let's see if we can find out why. So revenue is up 15%. So after being down 30%. So that's good that the growth is coming back. That's the good news. And they're making a couple, look at that. So I think the valuation is just a little high. They need to like really double or triple this net income. But it's good news. They're making net income every quarter and they have a really good balance sheet. Look at that. Absolute monster of a balance sheet. So, all right. Yeah. Hey, try not to spam there. Yeah. Thanks, Mars. Yeah. Hey, try not to spam. I want to get to all the stocks here. Sorry if I don't get to all of them. Yeah. IONQ, unfortunately, this is one I don't like. I love the quantum industry, but IONQ, I think, is just has too high of a market cap. So look, if you look at the top right, the whole company is worth 12 billion. So it's a $12 billion company. And the revenue is, 10 mil a quarter, 7 million. It actually fell year over year. Revenue fell 0.21%, but I can't pay it. I know so many companies with half the market cap or more than that. Or like I know $3-4 billion companies with like dramatically better fundamentals. So from a financials point of view, I can't buy this stock. But the momentum around quantum is so high right now. If the best quantum exposure is probably going to be like your Google and IBM. These have the money and the talent to be the industry leaders. What platform is this? Yeah, hey, this is a brokerage right here called Moomoo. If you want to download it, it's in the link tree in my bio, the very first link there. So here's a really cool company. Yeah, Google stock. Yo, I love this one. I've kind of been loading the boat on this one. I own 19 shares of them. Here's what's so great about Google. I mean, the PE ratio right here is a 20. So first off, they're trading at 20.7 times net income. Yo, what up, Shay? Said, yo, we'll check out Qualcomm. Yeah, we'll check that one out after this. And Google, the margin growth has been really good here as well. 13% revenue growth, but net income growth has been 19%. So that means they're growing their net margins. But here's what I want to really take away here. I mean, look at this. They made 28 billion just in the most recent quarter. So what is Google doing with 28 billion of after-tax net income? Well, this is the money they're buying back their own stock with. If you look at the top, they're literally spending $13-15 billion every quarter buying back their own stock. And they just started paying a dividend. The dividend only costs $2.5 billion. So they have so much room to raise their dividend. They're buying back their stock like crazy. They're so innovative. They own YouTube. They own Android. They have the Google Cloud. They're in cybersecurity with Wiz. They have quantum chips. They own Waymo. It's like an ETF in one. Yeah, look at the Google Cloud business, up 31% year over year to a new record. I mean, absolutely monster growth here. So yeah, I like Google as a just hold forever kind of stock there. I saw Adam YouTube and follow you. Oh, really, CB1C? Thanks so much for the follow, man. I appreciate you. So, all right, let's see. Okay, here's a company, RXRX. This is a stock that I don't like this one either, sadly. Oh, actually, we won't look at that one because we'll look at Qualcomm real quick. So this is like a smartphone chip play. Yo, Tobo, thanks again for the rose there. But here's Qualcomm. If we look at the dividend, they have a 2.15% dividend, and the payout ratio is only at 36%. So they actually have a lot of room to raise their dividend. And check this out. The PE is a 16. So versus the industry average of 46, I mean, that's a pretty fair PE. Yeah, here's their smartphone chip market share. I love this data. Yeah, look at that. They have a 28% smartphone chip market share. And if you go to the net income, I mean, they're printing money. Look at that. It grew 21%. It's still growing. Over 2 to 3 billion in net income every quarter. So I'm liking Qualcomm, man. Smartphone chip play right there. What do you think about crypto, Dogecoin? I don't know about that one. Bought DIV DIV stock. What is that one? Global X Super Dividend US. So yeah, I would be careful with these higher yielding plays because look at the stock price. I mean, the stock just doesn't keep up with the S&P 500. And if you look at the dividend, it's kind of fallen. Look, it was $1.20 in 2023. Then it went to $1.03. And now for the 2025, it's only 62 cents. So the trend of the dividend hasn't been too well. So not an ETF that I love, but you just buy that to probably maximize your dividend income. So, here's a great one as well. Hey, Broadcom. Yeah, man. Broadcom, one of my favorite companies. And we can look at Apple too. Yeah. So Broadcom's at an all-time high right now. They deserve it, man. I really think they do. They have a nice dividend too, 0.8% dividend yield. But a lot of people know Broadcom for the semiconductor solutions. But the main growth factor, especially in terms of the margin, has been from their infrastructure software. look at this growth. I mean, it used to be, 3 or 2 billion a quarter. And now it's exploded 6.6 billion just in the most recent quarter. And that's done wonders for their free cash flow. I mean, that's what FCF stands for. They literally made 6.4 billion of free cash flow just this quarter, up 44% year over year. So, yo, DJ Jaguar, see you later, man. Have a great Sunday. Let's see. Um, Buy real ETH memes. What, Tom? All right, so let's see. Um, yeah, let's look at Apple too. So AAPL. So I actually just bought this phone yesterday at Best Buy. So hey, I'm supporting the Apple stock. A lot of people are locked in the Apple ecosystem. So if we go to their revenue, half the revenue comes from the iPhone, and then they're in the services business. So whenever you go buy something in the App Store, Apple takes a 30% fee on that high margin services fee. This is nearly 100 billion of annual revenue for them. So that also includes the iCloud. But yeah, then they're in the Mac, the iPad. But here's why Apple's a bit affected by tariffs. Only 36% of the revenue comes from the US, then EU. But I love this company. Another stock doing incredible buybacks. If we go to the net income right here, 23 billion in net income a quarter. And let's see how much they're doing in buybacks. They have the largest buyback program of any company in the world. Yeah, they spend roughly $25 billion a quarter buying back their own stock. And their dividend only costs $3.8 billion. Buybacks are optional. Apple just chooses to buy back their own stock and chooses to spend $25 billion a quarter, mostly because they're too big and can't really acquire any companies with that. Regulation just would not allow that. But they have a lot of future room to raise the dividend. Like they literally could right now afford to 3 to 4x their dividend. They just choose not to. And instead do buybacks. And that helps out the company. Whenever they buy back their own stock, makes the total common shares outstanding go down and the EPS go up because the net income is divided between less shares. Gives you more ownership, gives you more net income, pretty much forces the stock to go up. So I like to look for companies that buy back their own stock. Burak, what's up? What app is this? Yeah, hey, this is a brokerage right here, Burak. If you want to get this brokerage, I'm on Linktree in bio. Very first link there. It's my affiliate link. It's called Moomoo. But Buffett was dumping Apple. Why? He's just always dumping. I mean, it's still his largest holding. Here's the thing. Someone said Buffett's dumping Apple. Well, if we go to his portfolio, and this is the most recent SEC filing, it's still 22% of his portfolio. So he still owns a good chunk of Apple. But yeah, let's keep going here. Yeah, hey, we already looked at Plug Power. That one is going bankrupt, in my opinion. PayPal just announced a buyback equal to 20% of the market cap. You're exactly right. PayPal is a company that literally buys back their own stock at a ridiculous pace. And it's kind of the right thing for them to do. If we go to the PE, they're trading at like a commodity multiple. Everyone's heard of PayPal. Look at this. The PE is a 17. That's really like a market or a multiple where it's like not expected to create or lose you any value. And check this out right here. Here's the net income, 1.2 billion the most recent quarter. They're making over $1 billion in net income a quarter. Let me go check out the buybacks. We go to the cash flow statement, then you go to the buybacks and they're spending over $1 billion, well over $1 billion every quarter buying back their own stock. So yeah, they bought back like 7% of all the stock the past year. So you own 7% more of the company than you did a year ago. Pretty crazy. So in XPI, is that thoughts on MSTY? Yeah, MSTY is basically there to maximize your dividend income. You're not going to outperform the market in the long run. But what you do get is a monthly dividend. And look, this is kind of the trend that's probably going to happen. The dividend payouts are going to go lower every year. In 2024 it was 27, 2025 it was 12. So you basically buy it to maximize your dividend income, though expect not to outperform the market. Hey Jax, what's up? Hey, it's actually a brokerage. If you want to get it, it's in the link tree in bio there, first link. It's called Moomoo. So someone said Crocs. Yeah, hey, what up? Bishop said Crocs stock. So yeah, this is the Crocs, the little shoes. So this is the thing. If we go to the Crocs brand, which is 81% of the business, it only grew 2% year over year. So the growth is kind of slowing. And also bad news. Has anyone heard of Hey Dude? They also bought the Hey Dude brand a while back. And this has also lost its growth as well. It's down like 20% off its peak, down 10% year over year. So unfortunately for them, they kind of just lost their growth. But still, this is the good news. They're printing money right now, a couple $100 million every quarter, and it's still growing. Grew 5% year over year, even though the revenue fell year over year. The net income grew because they have margin pricing power. they were able to raise their margins. Ridiculous. So yeah, they're trading at a stupid 6 PE. I mean, really cheap valuation right there. Yo, Lisa said, congratulations on FIX. Yeah, thank you so much. Yo, on Friday was the best day ever in my portfolio. Look at my largest holding right here, ticker symbol FIX. On Friday, they went up 22% with outstanding earnings. So, Seb said no one said Crocs. Yeah, hey, I'm streaming on YouTube and TikTok right now. So someone in the YouTube, Yoda Bishop said Crocs. What's up? Hey, by the way, best way to support me for everyone on the TikTok stream, please watch the stream from YouTube. My YouTube channel is called Nathan Robert. I'm streaming on there. If you miss anything, you can replay it. That's the best way to support me because I sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram. Only thing I have is a YouTube channel, and I'm streaming on there too. Best. So anyway, yeah, watch out for people impersonating me. I'll never DM you. I don't sell nothing, like I said. So let's keep going here. What is this stock right here? BBAI. Okay, well, look at BBAI. I didn't find any value in this stock. Well, they've lost over 10% of the market cap in net income the past year. So it's a very small name, a $2.15 billion company. So the whole company's worth just over $2 billion, and they've lost well over $200 million just the past year, which is 10% of the market cap. So you do want to see the net income losses narrow, which is good, but look at the revenue. It's up 5%. I got to do more research on this company. I don't know what they do, but they did just fortify their balance sheet by issuing a bunch of shares. You know what? Should we see exactly how much shares they issued the most recent quarter? Not much, actually, but they're helping out their balance sheet because the stock's going up so much. Happening, yeah. Hey, Gabriel, this is a brokerage. It's called Moomoo. It's in the link tree in bio, first link if you want to get it. So NXPI. Yo, thank you so much, Seb. Yeah, NXPI. Thank you so much, man. Let's check it out. NXP Semiconductors. So, yeah, this is a $56 billion company, a huge company, actually. So, semiconductor play. Let's see. So, so this might be why the stock has kind of been struggling versus like an AMD or an Nvidia. It might be underperforming because the revenue is kind of just slowly going down. It's down 6% year over year. The net income fell 31%, so the margins are falling too. Not great in terms of financials right now. So, but maybe they gave good guidance. Like maybe the worst is over for them because the margins are everything's falling. So I'm surprised to see the stock, doing so decent. But yeah, hey, do they pay a dividend? They do, a 1.8% dividend. Yikes. Okay, I'd be careful with that one. Just for the financials, we want to see it kind of recover. So, yeah. Oh, we can look at we'll look at Nvidia after this one. I wanted to look at where did it go? Wait, where? Oh yeah, right here, FTNT. So this is Fortinet right here. Absolutely incredible cybersecurity name. So if you're looking for a cybersecurity stock, this one is a stock I really like. So they're at an all-time high right now, and in my opinion, they deserve to be. And yo, Ellie Chaymat, thank you so much for the rose. I really appreciate that. If you got a stock you want me to look at, let me know. I'll check it out for you. But yeah, here's Fortinet right here. They have a security subscription, which is 40% of the revenue. I like how diversified that they are. But look at their subscription revenue specifically, which is all reoccurring revenue. It grew 17% year over year to a new record. I mean, if we kind of look at this on an annual basis, I mean, this is what you want to just buy and hold forever kind of stock. I mean, this is incredible growth. And if we go to the free cash flow, I mean, 800 mil of free cash flow this quarter, 400 million in net income. Look at that. They're making 400 or 500 million of net income every single quarter. So Fortinet, I mean, they deserve to be at all-time highs. They're crushing it. Exciting week ahead. Yeah, we get a lot of earnings. You showed Google earlier. What's the best one to invest in? Class C. Yo, here, I'll show you my shares. It doesn't matter which one you own. I own the non-voting right shares. I own GOOG. Just because I'm never going to vote with my shares anyway. So yeah, I got GOOG. There's no one that's really better. Both are the same, but yeah. Hey, nice JAXX. You got Fortinet. You must be loving that position. So BlackRock AI, what's that one? Wait, TXN. What's TXN? Oh, Texas Instruments. So yeah, they had a rough earnings report. They did gap down. We can look at Kava too. So Texas Instruments, I think they have a dividend too. So yeah, this is the rough part. They have a 2.88% dividend, and the payout ratio is now over 100%. So it's tough for them to really afford the dividend because, look at that. This is tough. The dividend cost $1.36 out of EPS every quarter, and look at the EPS. It's $1.41. Like that payout ratio, like all their profits are being paid out into or all the net income is being paid out into dividends. So they have no leftover money to like buy back their own stock or reinvest in the company without diluting you. So they honestly should cut their dividend. Yeah, positive. Thanks so much. I'm glad you are enjoying. Yeah, if you want to hit the follow button, we do this stream every Sunday. We trying to find stocks to buy next week. So here's Kava Group. I actually saw a Kava for the first time yesterday next to the Best Buy I was at. But check this out. If we go to Kava, I think they're like a Chipotle competitor. This is the great news for a restaurant in this environment. They're really growing their net income. This is great news. So really good net income growth. Revenue's up 28% year over year after being up 28% the last year. I mean, really good growth. So yeah, that's a restaurant, which isn't a sector some people don't like, and I get that. So I want to put a little bit into something now. What would you suggest, Google or Fortinet? I'd pick Google, but here's another company. If you're looking for a stock that's not at all-time highs to maybe buy, here's one I'd maybe put on the watch list, and this is one I just bought. That little blue line there is my cost basis. I have 2.4 shares of PGR Progressive. It's that insurance company, and oh my gosh, no. And if we go to the profits right here, this is the best part. I mean, look at the right there. I mean, they made 3.2 billion of net income. Net income's at a record. Just the profits are at a record. This is ridiculous. So anyway, Progressive is one I like, and I decided to buy them. SES stock. Yeah, hey, let me get to this one. My bad. So this is SESAI. Oh, wait. So I didn't know. This is only a $400 million company. So not too big of a market cap. I didn't know that. So good news though, the revenue is at 5 million. I mean, it's kind of easy to grow small numbers, but good or revenue growth, but they're losing 10, 20 mil a quarter. Yeah, when you lose that net income, it's got to come from somewhere. So you can kind of see how their assets just go down every quarter. So it's just such a small company. I got to do more research, but yeah, 5 mil of revenue this quarter. Yeah, I'd be careful with that one. But here's a company with real revenue and real growth. This one is no meme stock, in my opinion. This is a real great, high quality company. Yeah, what up, Sonal? Let's check out HIMS right here. So if we go to the revenue right here, this is the best part. I mean, you can't make this up. The revenue is up 110% from the previous year. So the revenue is more than doubled. The lifeblood of the company, the sales. But there is some news you got to be careful with. Some of those sales, a lot of that growth came from selling a weight loss prescription. Hims used to sell Ozempic. They had a partnership with NVO. They used to sell Ozempic, and on this day, NVO abruptly ended their partnership. They said Hims is no longer allowed to sell Ozempic, and that's why the stock gapped down that day. So the future has a little bit of a headwind, but just from that. But for right now, they have a lot of other products as well, so it's okay. But the free cash flow is ridiculous. It's up 3x. Net income's up 3x. They're going to be making over 200 mil of free cash flow and net income a year. No debt. I mean, look at this cash from operations growth. I mean, oh my goodness, it's impressive. So yeah, that's one I'd probably just hold shares of. So let's see. I got PRU. Is that Prudent Financial? Let's see. PRU. Prudential Financial. Okay, so yeah, I think this is a bank right here. Some of these stocks, because of the high dividend, it has been flat. Like since 2018, it's the same stock price. So do beware. But yeah, if we go to the dividend, you get a nice yield here, a 5% dividend. So you get 5% of your money back every year in a dividend. Yeah, look at that. Or international businesses, institutional retirement, group insurance. So they are in insurance, individual life. So yeah, if you go to the net income right here, last quarter was rough, only 70 mil. It fell 94%. So something happened. But anyway, if you kind of average out the 4 quarters, they're making a lot of money, a couple $100 million a quarter. So if they do cut the dividend, do you think it might happen this year? Most likely not. I don't know, Richard. Texas Instruments might have to cut their dividend. I do think that is a risk there. Someone said Chevron stock. That's a stock Buffett owns. We go to Buffett's portfolio right here. 6.3% of his portfolio is in Chevron. And this is an oil and gas play. And these oil and gas stocks, whenever you buy them, you get a nice dividend. So check this out. You get a 4.26% dividend yield with this company and exposure to oil and gas. Whenever there's inflation, war fears, currency fears, these oil stocks tend to do good. And look at these profits. I mean, oil's worth having a small allocation of your portfolio to, maybe 4 or 5%, not much more, just because it doesn't really outperform in the long run. But yeah, look at this net income. They're making a couple billion every quarter, and then they just share a lot of that with the shareholders through dividends and buybacks. So yeah. JPN just pay me. Yeah, hey, JP Morgan has been one of the best performing ones. Hey, what up, Davon? Um, any earnings this week? I mean, I'm not gonna make any call options or anything. I might buy some shares, but SoFi will be. If we can go to the earnings this week, actually, let me go to my watch list. Only stocks on my watch list will filter. This week we got, oh, that's Ray-Bans, Waste Management, United Health on Tuesday. United Health, PayPal. Oh, we got Meta. Meta on Wednesday, Amazon on Thursday, and Ferrari. Friday is new Nintendo stock. Hey, Nintendo with the new Switch too. So a lot of my stocks are reporting earnings. So I'll show you. I got Meta right here. 5 shares of Meta. Let's go. All right. Yeah, the Fig IPO. Yeah, the Fig IPO. Here's the thing with this IPO. I see a lot of questions about this. I'll show you one thing you do got to be aware if you're checking out this Fig IPO. If you look at the middle of my screen, there's a flipping policy. If you buy this before they IPO, you're not allowed to sell your shares for 30 days. You're in a lockup period. And if you do, you get a huge restriction on your account. You can't buy future IPOs. So I'm not going to buy it before the IPO, but I'll be interested because it would suck to like buy it and then the thing 3x's and then maybe it falls by the 30th day. Who knows? So just know that. Yeah, that's what's up, Blue Cannon. Yeah, I love it. Please do NASDAQ. What are you talking about? The QQQs or the NASDAQ stock? Ticker symbol NDAQ. Let me know and I'll check it out for you. Um, do you sell any puts? No, I don't do any options mainly. I mainly just like to buy and hold great companies for the long run. Yeah, we can check out JP Morgan too. This has been literally like the best performing bank. Even though they're the biggest, they just continue to grow. Look at this. I mean, the stock's at an all-time high. You know, like the other bank we just looked at, it had a 5% dividend, but not much stock price appreciation. I'd rather pick a JP Morgan with a smaller dividend, a 1.77% dividend, but it has a lot more growth. So sometimes a high payout ratio can choke the company's future growth of the stock price. So that's why, like this portfolio right here, I love dividend stocks. Every single one of these companies pays a dividend, but all these, in my opinion, are dividend growth stocks where they don't have too high of a payout ratio. So let's keep going here. Um, Bank of America too. Hey, since we're looking at all of the bank stocks, hey, that's another Buffett play. So we go back to Buffett's portfolio. Yeah, his 10% of his portfolio, his third largest holding is in Bank of America. They have not actually been performing too well compared to JP Morgan. But because this one also has a high yield, or well, not too much, a 2.15% dividend yield. And actually, that's JP Morgan has the same dividend yield and a lower payout ratio. So that's interesting. But yeah, they're in consumer banking, global markets, wealth management. So yeah, global banking. And look at the net income. I mean, Bank of America is making 7 billion in net income a quarter. What's the easiest way to get exposure to SpaceX? I don't know. I think you can do it through SoFi, but I don't know how actually. Stefan said, "What app is this?" Yeah, hey, this app I'm on, it's actually a brokerage. If you want to download it, it's in the link tree in bio. First link there. I love it for all the analysis you can do. Like someone said, AUR. Let's go look. Let's go analyze AUR. This might be a startup. Because I remember this company. Because if we go to the revenue right here, oops. Yeah, so we go to the revenue. Yeah, this is from 2022. So right now, this company doesn't actually sell anything. This is a revenue-less company. Kind of see from right here. But go to the shareholders right here. This is the interesting part. Uber owns 18% of this company. So 19% of the company is basically all owned by Uber. So Uber must see something good in this company. They have a good balance sheet, but I got to do more research on what they do. So probably something related to Uber. Yeah. Pepsi stock in Royal Caribbean. Yeah, remind me to look at Royal Caribbean and PDD. Yo, Rocco, I want to look at PDD too. Just broke up. That's the guy that's the stock that owns Temu. So here's PepsiCo. Yeah, so Pepsi, this is a nice dividend play right here. And I love a lot of their assets and brands like Frito-Lay. You know, they're not just selling a bunch of drinks. They own the Frito-Lay business, like Doritos, Cheetos, lots of snacks like that, popcorners. And they have I love popcorners. Anyone have popcorners? Man, they're so good for you and delicious. But anyway, 4% dividend on this company. So really nice dividend. And look at the net income this company makes. I mean, this is why the stock actually fell. Well, actually, they went up on earnings. Was that real? Yeah, so they had a little one-time adjustment. But yeah, they're making a couple billion in net income every quarter. The dividend's nice. So let me go back to PDD right here. So PDD is actually the company that owns Temu. So if anyone's heard of Temu, and yo, Lemire, I'm saying your name right, hopefully. And yo, Moosh, what's up, man? I'll look at that stock too. Thanks for the rose earlier too. Yeah, but thank you, Lamir. So here is PDD. This is this company that owns Temu. Will switch their currency to US dollars because obviously they're a Chinese company. But yeah, a 12 PE, really low valuation. Active customers, they got 750 million monthly active customers. That's pretty crazy. Yeah, and here's the net income. Now, it did fall 47% year over year after being up 230%. So still, they're printing out a lot of money. The valuation's really low. So yeah, that's Temu stock. They're Chinese. So let's see. ASST. Asset entities. I've never heard of this stock before. So a $64 million company. So extremely low market cap. That's one thing you do got to be careful with. So do they have any fundamentals? So they're losing not that much. They're losing just like 1-2 mil a quarter. Revenue's 100,000, so not much revenue. Not too good of a balance sheet because it's only 5 million of assets. Yo, no way, Moosh. Thanks for the little rose to gift there, dude. Thanks so much, man. So this looks like a cool little momentum play. At the end of the day, they're not losing that much money. They're only losing 1-2 million, but they're only a $65 million company. So it is kind of significant. So that's just a really small market cap. I would be careful with that one. So let's see. SWKS. What's this one? So Skyworks Solutions. That sounds familiar, but I don't know what they do. So, oh, there was another stock I wanted to look at that I never got to. Dang it, I forgot what it was. But Skyworks Solutions right here, $10 billion company. So let's see. What do they actually do? Let me go read this just so we can. They're a semiconductor play. Okay. Aerospace. Okay. So let's go see what the PE is. So a 27 PE, so pretty fair valuation. Here's the net income. So this is the bad news. Yeah, the revenue fell 8%. The net income fell 62%. So that means their margins are collapsing. Yeah, the margins fell 60%. So I would be careful with Skyworks Solutions. The financials aren't heading in the right direction. So we want to kind of see the growth come back to this company. They do have a good balance sheet though. So the free cash flow is really good too. Or let's see, free cash flow. Yeah, look at that, 300 mil of free cash flow. But the net income is needs to grow a bit. NVO, yo, what up, Christian? You said NVO stock. Yeah, this is the company that owns Ozempic. So if anyone's heard of that weight loss prescription, Ozempic, this is the stock that owns that. And yeah, look at that. 95% of the revenue comes from their obesity care products, which is pretty cool. And look at this. So it's kind of like a pure play for weight loss. Oh, so we're going to switch their currency to US dollars. This isn't an American company, but look at this. They're making in US dollars. Look at that. 3-4 billion of net income a quarter. Get a nice dividend, a 2.25% yield. So NVO is pretty cool, actually. Yo, no way. Blue 414 with the 25 what ups, the 25 roses, dude. Thanks so much, man. I appreciate that. Yeah, for Blue, if you got a stock you want me to look at, let me know. We'll check it out. TLRY. Everyone thinks it's a blank company, but they own a bunch of. Ooh, I can't say that word on the TikTok stream, but that's really cool, actually. But the one thing I remember about this stock is they just lose a bunch of money, which sucks. So yeah, let me analyze them. Dang, look at that stock. So they're a $700 million company. So the whole company is worth $700 million. And I don't know how this is possible, but they just lost $790 million the most recent quarter, 85 mil the quarter before. So yeah, look at that. They kind of just haven't made any money ever. They permanently just burn money, which is why the stock kind of just keeps on going lower. They can't really afford these net income losses. But yeah, here's kind of the, you're right, the beverage business is 30% of the revenue. And hey, look at that. The beverage business has, looks like it's really grown there. You're right, but those net income losses are scary. There might be some real bankruptcy risk there. Let's see. What do you think of Chipotle? Yeah, Chipotle, unfortunately, their margins just fell. Yeah, what up, Sam? Where are you pulling this info from? Yeah, hey, this is a brokerage right here, user78. If you want to get this brokerage I'm on, it's in the link tree in my bio there, first link. It's free. It's an affiliate link. So here's Chipotle, though. The earnings, let's see. Look at this. The orange line is what the analysts were expecting. They missed by a good chunk on revenue, which isn't great. And look at this. So this is the bad news. The revenue went up by 3%. So the revenue grew by 3%, but the profits, the net income fell by 4%. So that means the net margins are falling by 7% year over year, which I don't think investors love. But yeah, I still like them. They're still making a lot of net income. The valuation's a little high though. I want to wait for the valuation to kind of go lower. Yeah, thanks for all the follows. PROP stock. Yeah, thanks again, Blue Four. So let's check out PROP. I don't think I've heard of this company before. Perry. Wait. Okay, that's a weird name. I'm not gonna. Prairie. Prairie Operating. So very small company. If you look in the IXRN. Thanks for the roses too, man. The hat. I appreciate that, man. So they're a $168 million market cap. So extremely small company. Um, the revenue did just go up by a lot, though. They used to basically have no revenue, 100,000, but now it's 13 million in the most recent quarter. So something just happened. The losses are narrowing. They lost 71% less money. So hey, they actually made operating profit technically. That's interesting. Free cash flow is 16 mil. So it's actually, oh wow. So that's what happened. They invested 500 million into some sort of asset. And that's why the balance sheet just went up by 500 million. You go to the cash from investing activities. So they just acquired some sort of really nice asset for 500 million. So that could bring some growth in the future, actually. That's interesting. Okay. Ramp. Yo, Sam, what's up? RAMP. Let's check it out. So what is Ramp? Live Ramp. Okay. $2.2 billion company. Okay. The stock has been flat for a long time though. So, but they have this subscription revenue, which is most of the business. Let's see this. Yeah. Hey, I mean, this trend is good. Subscription revenues at a new record, 580 million. It's up 8% year over year. Let's see the profits though. So revenue's up 9 and they're still struggling to get net income positive. So, yeah, balance sheet's decent. So we just want to see this company make some actual profits now. So yeah, I guess the growth's slowing a little bit. So we want to see growth start to come back a little more and net income get positive. So that might be why the stock has kind of been struggling. Still haven't really made any. Dang, they're the same price as they were back in the year 2001. So, Omex or Ford? That's another stock that's the same price that it was back in 2001. Here's Ford on the monthly. Ford is the same price that it was back in the year 2000. And but the main reason you're buying Ford right now is as a tariff play and for the dividend. So if you buy them, you actually get a 6.5% dividend yield right now and a 53% payout ratio. So they actually might have room to raise the dividend. Yo, Trippy Perks, what's up? Thanks for the 4 roses, dude. Yeah, ABR is real estate. Actually, ABR is real estate loans. Or wait, ABR, right? Wait, ABR. That's Arbor. Oh yeah, Arbor Realty Trust. So yeah, this is the mortgage company. I believe they have a super high dividend. So check this out. Yeah, a 14% dividend. So crazy high dividend. Maybe they do own some real estate. Yeah, loan origination. So yeah, loan and finance servicing. So yeah. Revenue's down 18%. I don't like the trend of the revenue going down, and the profits are down 40%. So that might be why the stock has been struggling a little bit. But basically, you're buying this one to maximize your dividend income. There's their main competitors like a Starwood, STWD. Here, yeah, Starwood Property Trust. Looking for another higher yielding play. This one has a 10% dividend. But these again just don't outperform the market in the long run compared to like an S&P, but you just buy it to maximize your dividend income there. So LIDR, what is this? LIDAR company? Let's see, LIDR. That'd be a cool ticker symbol. So AI, that's a funny name, bro. That's so stupid. It's A and then EYE. Like if you look in the top left, there's what the company's called, and it pronounced AI. So okay, so there was something that caused the stock to go berserk right here. I don't know what it was. I don't really want to read on why. The CEO purchased shares. Okay, I don't know why the stock rallied up so much, but there's some sort of momentum. Again, not a company that's really blowing me away. Oh, an $86 million company that lost and is losing $8 million a quarter. The revenue is $60,000 a quarter. Yeah, so yeah, I'd be really careful with that one. But there was some sort of good news right there. OUST over LIDR. I agree with that. I really like OUST as well. Let me actually check this one out because this one is on my watch list. If you go to the revenue is up 25%. So that's really good revenue growth. And the losses are narrowing. They're still losing money every quarter, but the losses are narrowing. They're deleveraging their balance sheet. So, what about shareholders? Yeah. So, yeah, I might like that one more too. So TSN, is that, wait, Tyson? Oh yeah, a lot of people have been talking about Tyson Foods lately. This stock has been struggling, same price it was in 2016. This is I love their brands, man. I love the Tyson chicken nuggets. They have like the air fried chicken nuggets and stuff. They're in beef, chicken, prepared foods. What about the dividend? Yeah, look at that. If you buy this company, you get a near 4% yield. Bit of a high payout ratio, though, at 90% payout ratio, but still, I like them a lot. The net income did just fall a bit, so do beware there. Oh, yeah, hey, if you want to support me, guys, best way to support me is go subscribe to my YouTube channel. That's the only thing I have, and I'm trying to promote. I sell nothing. I don't have a course, book, Discord. All I have is a YouTube channel, so best way to support me, go subscribe to my YouTube channel. Go leave a comment on there. It's called Nathan Robert. It's also in the link tree in my bio, my YouTube channel, but streaming on there too. If you missed anything, you can replay it. I probably won't be streaming for too much longer. Yo, Not Fades, how's it going, man? Yeah, I hope you guys are having a great Sunday. We do the same stream every Sunday. We've been streaming for well over 2 hours now, so I've been having fun. Let's keep going here for a while. So Salesforce and Lucid. Yeah, let's look at Salesforce, and then we'll look at Lucid, because Lucid just had a huge order from Uber. Uber ordered $1.2 billion worth of cars from Lucid. Okay, let's go. Come on. Let's pull up Salesforce. So here we go. So this one has been struggling recently just because the growth has started to slow. The growth is slowing. So if we go to the net income, their after-tax net income, it only grew by 0.5% year over year. So not good, and the free cash flow only grew by 3%. So, low single digits is what their profits are growing at, which isn't great. I think investors wanted more. But still, I really like this company. You get a 0.6% dividend yield. They own Slack. They just acquired Informa or whatever. We go to like the revenue here, like the service revenue at a record, the sales revenue is at a record, the platform and other at a record. So yeah, I do like Salesforce. I think the valuation might be pretty fair here. LIDR was teaming up with NVIDIA. Oh, that's the news. Hey, thanks for that, man. I didn't know that. So yeah, let's go look at Lucid right here. So Lucid, still, this one I probably wouldn't buy this one, but they've diluted you so much. But check this out. Lucid just basically sold 1.2 billion of cars to Uber. They partner with Neuro AI, I believe, and also the cars are using NVIDIA software. So NVIDIA software is kind of powering them. But here's kind of the bad news. Yeah, look at the net income. They're losing a lot of money, but the losses are narrowing, which is good. But still, they lost 400 mil this quarter, 400 mil last quarter. And but that order really saved them. Let me actually check the dilution. I wonder if it'll show us down. So, wow, they're issuing a lot. Okay, so yeah, they issued 1.74 billion of shares while the stock was at an all-time low. All right, and the market cap is 8 billion. So they diluted the shareholder. You've been diluted by over 20% just in 1 year. Not great. But the company needs to do that to stay afloat. LTC, yo, what up, Matt? LTC, let me know if you're talking about LTC Properties or Litecoin. Because if you're talking about LTC Properties, this is that senior housing care company. It's a REIT that pays a monthly dividend. So this is a monthly paying company with a 6% dividend. You get exposure to elderly care real estate. They do triple net leases. Oh, no. Hey, okay. Well, dang it. He said he was talking about Litecoin. So LTC Properties, RIP. But yeah, Litecoin, this unfortunately just hasn't really kept up with Bitcoin at all. Bitcoin is right at all-time highs, and Litecoin is nowhere near all-time highs. So in terms of an investment, I wouldn't really trust that one too much, like especially more than Bitcoin. I'd probably trust Bitcoin more than Litecoin to appreciate in price more. But that's kind of like people pay people in Litecoin just for the low fees, and then they instantly sell it and trade it for other stuff. So someone said DOW. Yeah, Dow Chemical Company just reported really bad numbers, and I feel bad if you own this one because they're going to have to, I think they pay a dividend. They're going to have to cut it though. So yeah, look at that. They have a 10% dividend yield. The dividend cost 35 cents of EPS a quarter, and look at the EPS. They just lost $1.13. They used to be able to afford the dividend sometimes. It cost 30 cents. Look at this. This is in 2022. They made $2 a share. So they could easily pay 30 cents out in dividends. Now, though, this is why the stock's at all-time lows pretty much. If we zoom out on the stock, it's done terrible because the profits are negative. If you go to net income, they lost 800 mil this quarter and 300 mil the previous quarter, 35 mil the previous quarter. So this is not trending in the right direction. So yeah, this is like your specialty plastics company. Yeah, packaging, industrial intermediates. So yeah, nothing's really blowing me away there. Not good. They're probably gonna have to cut their dividend. There's some real bank dividend cut risk. Someone said Leggett and Platt. So this is another one that is probably gonna have to cut their dividend. EV Spartan, no way, dude. Thanks so much for the rose there, man. Appreciate that. So here's Leggett and Platt. What's the yield here? So a 1.94% dividend yield. The dividend got cut, but also the payout ratio is negative. So what that means is they're losing dollar holla. So yeah, this net income is a bit choppy, but at least, yeah, if we go to the operating profit, at least they're making 50, 60 mil a quarter, but it's rough. I mean, this company's really begging for a low interest rate environment. I think they just sell furniture. Yeah, look, bedding products. When real estate prices go lower, low interest rate environment, people will start buying that stuff again. Do you reinvest your dividends or do you realize them? Well, they're realized either way. There's no tax benefit for reinvesting the dividend, but yeah, I don't reinvest my dividends. LMO calls LTC does nothing. LTC will 5A. Hey, I hope so. ERON. What's up, man? So MSTR. Yeah, this is the this is the stock that issues stock to buy dividends. Or I'm slow, man. It's been a long stream so far, but here's what you want to look at for MicroStrategy. This balance sheet. I mean, their assets are at a record, and they got all these assets by buying Bitcoin from issuing shares. So if we go to the most recent quarter, they literally diluted you by 4 billion this quarter, 15 billion the quarter before. So what they did with that money is just bought Bitcoin. So yeah, MicroStrategy is just a Bitcoin play. Whenever Bitcoin goes up 1%, sometimes they go up like 2% or something. Rocco said for a chemical company, CC Chemours. Let's see. Let's check it out. Yeah, so this stock price looks pretty similar to the Dow Chemical Company. Let's see if they're doing any better. So Titanium Technologies, Thermal and Specialized Solutions, and Advanced Performance Materials. So let's check out the profits here. So revenue is up 0.4. And the net income just went down. So it's a bit choppy again of net income. But yeah, this one might be a better play than the Dow company. Yeah, another crazy yield. Wow. Yeah, 7% dividend. Yeah, they already cut their dividend. They might have to cut it again for the Leggett and Platt company. Can you check COUR, please? Yeah, hey, we'll check it out, man. So Coursera, not like Corsair, but Coursera, huh? So a $2 billion company, they were up 36% on Friday. So, hey, there must have been some good news there. Let's go. Consumer and enterprise products, half of their revenue comes from the US. And let's see, revenue is up 9% year over year. And they're still losing some net income. So they are losing a bit of net income, but that's all right. So I don't know, man. Let me check out so if we look at the orange line is what the analysts were expecting. They beat like crazy on revenue. They lost a lot less net income than expected. So yeah, they really had a nice triple beat on earnings. They beat on every metric by a good chunk. So yeah, nice. Cubetics, look up Desync. Well, give me the ticker symbol. We'll check out that stock. And Toggy said ROOT stock, Root. Hey, let's check out Root. I think this is like an insurance company. I don't remember actually. But let's go look at them. So direct-to-consumer insurance. So wow, this is nuts. Look at the growth. I mean, it literally went from 70 million to 350 million in the most recent quarter. Very solid growth. Are they profitable? And they making net income on that. Look at that. 20 mil, 20 mil, 20 mil. So actually, Root, I see why you like this one, man. Insurance company, revenue's up 37, making 20 mil a quarter. So hey, that's actually really interesting. Archer Aviation, yeah, that one, Archer Aviation, that's a startup. Basically, I'm staying away from this one just because for right now there's no revenue. Like if I go to revenue, it says no data because Archie Aviation doesn't sell anything, not a product or a service. And if you go to the net income, they're losing like 100 mil a quarter. So I think Stellantis, which is Jeep, Dodge, is the largest shareholder, and Ark Investments owns another 4%. But I'm not buying that one, just because they're still revenueless. And they have a huge market cap for a company with no revenue. But there's a lot of bullish shareholders on that one. So yeah, the ticker symbol is, oh, okay, let's try DYSYNC. Yeah, I can't find that one. I typed it, or DSYNC. Yeah, man, that's not a ticker symbol. I can't find that one, man. Maybe it's just not on my platform. Sorry. So yeah, we'll look at a few more. Kenny, what's up? He said Sentinel S jumped on Palantir purchase. Really? Sentinel 1. So that might be why the stock rallied. Hey, wait, did Palantir purchase them? I don't know. So Sentinel One, yeah, let's see what their financials are like. So they are losing a bit of money. That's not good. They just lost 200 mil. The revenue's doing some good growth though. Revenue's up 22%, but I want to see them kind of narrow these losses. But still, I wonder what the Palantir news is there. Would you invest in Dogecoin right now? It's booming. I just don't own it. I don't own any crypto. I regret not owning Bitcoin, but yeah, I just stay away from crypto. As you know, I love thanks Rust Moments. Hey, what up, Blue? How do you know me? Yeah, if y'all wanna oh, I don't know if I should show it. Okay. QQQ. Yeah, hey, instead of buying QQQ, I would buy a QQQM. It's the exact same NASDAQ 100 ETF, exact same holdings, exact same weightings and everything, just with a lower expense ratio. So, in my opinion, that's the better buy. So, in Rivian, yeah, hey, Rivian, the largest shareholder of Rivian is actually Amazon. So, I like that. So, it's kind of backed by Amazon here. And Porsche, hey, so wow, I didn't know that. Amazon owns 13%, then Porsche owns 12%. So that's really interesting. The one thing I don't like about this one are the net income losses. They still lost $500 million this quarter, but the losses are narrowing. And yo, thanks again, IXRN. Oh no. TikTok's saying I'm AFK. Okay, we're back. All right, so yeah, these net income losses are the reason I don't love Rivian buying them individually. So my only exposure to Rivian is through my Amazon shares, you know. I think Amazon may like buy out more of the company if they really become successful. So Tommy said, you keep missing my question. Why do you have three brokerages instead of all one? Yeah, hey, Tommy, there's no burden of having multiple brokerages. You know, I have a different goal with each portfolio, by the way. So this account right here, my main taxable, is my dividend growth portfolio. I only buy stocks that pay dividends in here, and every stock in here is also in the S&P 500. So I only buy S&P 500 dividend growth companies. Also have my small little Roth IRA in here. But then my Moomoo account, if you look in the top left, it's called buy and hold portfolio. Once I buy a stock in here, I try and just hold it forever, try not to ever sell it. And then finally, my risk on portfolio is right here. If you look in the top left, we're only up 16% all time in here. I just like being fully transparent. You know, we got some losers in here as well. But yeah, this is my growthy portfolio where I buy some risky names. But oh yeah, let me go back to 3M right here. We'll look at a few more names, then I got to run. But yeah, if y'all wanted to follow Bone, we go live every Sunday at the same time, or this time and a little later sometimes. And we also stream every other day of the week. So yeah, and I sell nothing. I have no course, book, Discord, WhatsApp. Watch out for people impersonating me. I literally sell nothing. The only thing I do have is a YouTube channel. So if you want to help me out, best way to support me, just subscribe to my YouTube channel. It's called Nathan Roberts. I'm streaming on there as well. If you miss anything, you can replay it. So here's 3M. So 3M, you know, they own a lot of brands like Post-it Note, for example. So the dividend is 1.9% dividend yield here. Not too bad. Let's see, the net income, the revenue's up 1.4%, the net income down a bit, but the net income has recovered. You know, they had some huge losses from, yeah, look at that. They lost 7 billion, 2 billion. That's because they made these earplugs for the military, and the earplugs that they gave to the military gave all the people who use, well, not all of them, but a lot of the people, uh, uh, cancer, and it sucked. So there was a huge lawsuit. So they're still trying to recover from that. But hey, they're still making right now a lot of net income every quarter. Cash from operations is, ooh, that's down bad. But yeah. Anyway, 3M it's just like an okay company. I don't know if that's really going to outperform the market in the long run. Yeah, the 3M is facing a lawsuit law, longer than larger than the tobacco settlement. Forever Chemicals. Yeah, Kenny, it sucks, dude. Especially hurting our own men, hurting the military. Not great. But that was like 2 years ago. So, but they're still facing some class actions about that. So yeah, hopefully that was helpful, Tommy. Yeah. Do you believe the hype that Ethereum will moon? Tom Lee is back in a company that hey, I know I don't own any Ethereum. I think Ethereum is like well underperformed Bitcoin. Hey, look at this. What's kind of cool is you can stake because they're a proof of stake coin. You can like stake your Ethereum and get like a yield on them. But kind of look at Ethereum. Um, the all time high was in 2021, and they're kind of at the same high as they were in 2021. When if we go to Bitcoin, it's well off its 2021 high. Oh my gosh, go away. Thank you. Yeah, Bitcoin's at an all time high. So Bitcoin is just my favorite crypto if I had to pick one. And look at that. It looks like Bitcoin's on a nice little rally. Looks like stocks might open green next week. I mean, which is just ridiculous. Did you know the S&P 500 went up every single day last week, which is just crazy. So I think altcoin is just starting. What up, Dat One, dude? What app is this? Yeah, hey, INDI. I think you're talking about this app right here. This is my favorite app right here to do analysis. Again, if you want to get this app, it's in the link tree in my bio, the very first link there. It's an affiliate link. We'll both get some free stocks if you deposit like $100. And this is where I keep my idle cash too. If you like look in the middle of my screen, I got $800 of cash, earns me a nice little yield. So yeah, we'll look at one last stock here because I saw someone say Apple, and I'll show you all the analysis tools. So here's Apple right here. And yeah, but then we'll end the stream. I gotta run, but yeah, if y'all wanted the follow button, we'll be live again. We've been streaming for over 2 hours and 30 minutes, so this has been really fun. Here's their smartphone market share, 19% market share for Apple's smartphones, obviously. You can see the margins of the services business is incredible. And yeah, iPhone is half the revenue. Then the services revenue is 30%. If you go buy something in the App Store, they take a 30% fee, high margin fee. Then they have the Mac revenue, the wearables, the iPad, and they're a bit affected by tariffs because look at that. Only 36% of the revenue comes from the US, then EU, then China, and all these countries. Also, Apple is a huge buyback play. I mean, they made $25 billion of net income just in the most recent quarter. We go to the cash flow statement to see how much the dividend cost. Their dividend only cost $3.7 billion. And they made $21 billion this quarter. So what are they doing with the rest of their money? Well, they're literally spending $25 billion every quarter buying back their own stock. Apple has the largest buyback program of any stock in the world. So yeah, Apple's just a really shareholder-friendly company. That's like a stock you just want to kind of hold forever. Same with like Google, Meta, just buy these stocks forever. So anyway, if you want to get this app, it's my favorite one. Link tree in bio, first link. It's an affiliate link. And yeah, and if you want to support me, best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. Yeah, Kenny Ford, thanks for subscribing to my YouTube channel. You can just type in YouTube Nathan Robert, and you can replay the stream as well. The beginning of the streams are really fun. I recommend give it a shot. Just go watch the beginning of the stream. I think you'll like it for the first 10 minutes, and you can click off. But yeah, anyway, remember, we're going to be streaming every Sunday like this. And yeah, see you guys later. Thank you so much for being here, and see you in the next one. Have a great day. Happy Sunday. Have a great Sunday. Seriously. Yeah, thank you all for y'all on the YouTube stream. I really